Good morning, good evening, good afternoon, everybody. Welcome to a new week of trading. My name is Dirk, and I have the pleasure of being your host today. Today, I'm going to be alone. I have a bit of a special actually planned for you today to kind of address some of the questions a lot of you guys asked during the live streams of the last week. So really something unusual, something unique today, of course, about trading coming up. More info on that after this short intro. Here we are again. Good morning. Who's with us? We have Raphael with us. Good morning. We have Esmeralda with us. Good morning. How are you? We have Dumami with us. We have Louis with us. How are you doing? One of those, our frequent watchers as well. Swindler66. Nice name, by the way. We have Norax FX with us. We, of course, have our nurse from Australia, Henry, with us. Special warm welcome to you, Henry. How are you doing? And plenty of others here I can see already who are eager to start into a nice week of trading. And it's probably going to be quite a week we are seeing. We saw some interesting developments, not only here from Bitcoin, the chart you can see in the background here that I'm looking at. We also have, of course, a lot of data coming in this week, a lot of economic data. This morning we saw already Chinese industrial production. I think nowadays something you need to look as well and have an eye on this industrial production a little bit less good than expected, plus 5.8%. We saw retail sales, however, very, very strong, which is a leading indicator indicating that we could see higher than expected GDP growth in the future for China. The one thing we need to have an eye on, of course, this week is going to be the Fed interest rate decision. I don't think the interest rate decision itself so much, because it's pretty much set in stone that we're going to see an unchanged interest rate environment. However, oh, this is nice actually, no, isn't it? Tell me if it's too small now, the screen with the actual data. But of course, it's going to be interesting what Jerome Powell, 30 minutes after the interest rate decision, is going to share with us, with inflation data coming in from Japan also this week. This is going to be important for our dollar yen trade, which we are still in. By the way, how's that one doing this morning? Still in the green here. We have an entry of 145 on that short position, so still going well. A bit of volatile movements we're seeing there. So now I have a little bit of a special plan today, because I thought I'm going to be alone with you for the next 2 hours. And I remember last time when I was talking about how to use something like ChatGPT, or in general how to use language models to build a trading strategy, and especially also to backtest a trading strategy, to modify your trading strategy, and to kind of help you to find your edge in the market. I was under the assumption that there was a lot of interest in doing so. So my suggestion for today, and it's really up to you guys, would be that we go through the process, through my process, that is, of course, on how to use something like ChatGPT, how to use something like Claude to build a trading system on, let's say, for example, gold, since we are trading gold here most of the time. And we would like completely start with a blank slate, and then over the course of the next, however long it takes us, try to develop a trading strategy, but more important, to go through the process. There's no guarantee, of course, that the outcome of this is going to be a profitable trading strategy. And I would like to do that, actually, if you guys are interested, that is, of course, in a way where I do that together with you. So we build, we add indicators or whatever to the chart that you think are worth looking at. And then we are going to run this through a language model. I want to use Claude for this because I have a pro access there, and we're not going to hit the the limits of the daily limits and the chat limits of what we can do. So basically the lesson of this could be like, how do you prompt something like this? How's the process of building a trading system? What should you look for, to make also sure that the AI is not hallucinating, to kind of still use your brain to fact check, is this actually true, what I'm seeing there or not? If you like that idea, maybe you give me a like on this video, because I think it might be something that is very interesting also for a lot of other people out there. So to attract as many viewers for this as possible. I don't think there's really a great tutorial out there still that really shows you how to do that. Especially the prompting part can be a little bit tricky sometimes. And yeah, is that something you guys would be up to? I don't know how long it's going to take. I mean, we have like until 12:30 in theory. I don't think we can spend 2 hours with that, but maybe the next half hour, the next 45 minutes, go through this. And who knows if we find something that is worthwhile, that is worthwhile investigating further. Let me put it like this. Maybe we find something like a community trading system or something like this. So my first question, and while you guys comment on this, I'll quickly walk you through some of the things that popped out of the market this morning. So first of all, there's Bitcoin, of course. Whenever I'm on, I'm going to talk a little bit about Bitcoin as well. At the moment, very quickly, kind of a unique setup. We had the 8 weeks moving average, the blue line here holding up pretty well as a zone of support. Last time we had the zone of confluence here also, which was pretty nice, a pretty good entry there. But we are right now in the zone of compression. So I think it's going to go a little bit further sideways. The longer it goes sideways, the more it's going to build up tension like a rubber and then eventually snap to the upside or downside. Depends, of course, on what the stock markets are doing. Seeing pretty good futures results this morning from the S&P 500. The very, very early buying activity looks good there. We have, of course, euro-dollar trending higher again. We have the dollar trending lower. I've been talking a lot about this the last weeks really as well, that it seems like the dollar index wants to establish itself underneath this level of 100. So it's pretty much the same, in my opinion, going into this week of interest rate decisions, the same trends that we've been seeing forming a bit over the last, really weeks, I have to say. Same with gold. Of course, today a little bit down, but very, very close already to this all-time high of 3,500 was the last 3 days of last week. Very, very strong this morning because of the rising indices we are seeing here in the early morning session already. Of course, we see a little bit pressure on gold. And talking about gold, I think gold would, since we are always trading gold here, it would be a perfect kind of asset to try to go through the process of developing our trading system here today. So the first thing, so lesson about how to develop a trading system with AI beginning now. My first question for you would be, since I want this to be a little bit interactive with you guys, what indicators, for example, would you like me to add to the chart that we can incorporate into the trading strategy that we want to develop today? So I'm going to wait a little bit. I'm going to see what you guys answer. So the question is, what indicators would you like to add to the trading strategy that we are going to live today develop here on this live stream? Okay, Henry is saying stochastic, RSI, Fibonacci's. Bollinger, Nelson is saying. I assume you mean Bollinger Bands. So let's maybe start here by adding some. We're going to add an RSI. We are going to add stochastics. And we are going to add the Bollinger Bands. We also don't want to overcomplicate it too much, of course. Bollinger Bars, Bollinger Bands we need. And Fibonacci is going to be a little bit a difficult one because Fibonacci would you normally draw manually. So we would need an indicator that automatically draws Fibonacci's. And this might be something that is a little bit difficult, at least for it's possible, no doubt about this, but it's a bit difficult to implement this. Multiple time frame strategy, that is also something I would maybe as a second step incorporate this. So we want to start as simple as possible. We can always go more complicated from this. I see here MACD. Why not? We can add a MACD also. So I want to keep it a little bit more standard, at least for the moment. You know, we can always go a bit more crazy. SMC, I see here. What is SMC? Simple moving average, or what is that supposed to be? Yeah, that is something I would like to add as well, especially Quasimodos. But again, you know, for that step, we would need to tell the AI how Quasimodos look. For now, it's possible to do something like this, but since we start at the very beginning, I would like keep it very, very simple for now. Same goes for smart money concepts. It's possible, but you always have to go a step further back and tell the AI this is how it looks, because they are not, so to say, ready-made indicators that you can find here on TradingView. Yeah. Well, there is one from Xiamen Trading, of course. I used to use this one as well. But since it's a proprietary indicator from somebody else, I don't want to include that so much because we don't want to feed off the effort of somebody else, right? But of course, if you know, if you like what we're doing here, something we for sure can do in the future, or that you, with the knowledge you are going to learn today, also can you do by yourself. So all right, so we have, I think that's pretty much enough also already. Standard indicators, which is nothing bad. We have the Bollinger Bands. I'm going to leave this. I highly adjust. Maybe we add something like a simple moving averages. Vinicius is saying this as well. So something like a 200 simple moving average. That's also something that I personally always like to have on my screen. Going to make this a bit thicker. Yeah, exactly. Something like simple moving averages. We could, of course, also add more moving averages, like exponential moving average, and so on and so forth. But now we already have like 1, 2, 3, 4, 5 indicators that we use. And remember, you know, we are limited, of course, also in the data that we can process every day in those AI models. Or in online, at least, with something like ChatGPT or Claude. So let's now not overcomplicate things here and see how much data we get actually. So I'm going to zoom, see here how far this data goes back. I'm on a 15-minute chart right now. That looks pretty good. So we have data since the beginning of August of 2024. So that's almost 10 months of data, more than 10 months of data. That should be pretty good. So the first thing we want to do now is we want to export this data. And if you're using TradingView, you can do this by going to this little drop-down menu and click on Export Chart Data. Chart data here is a gold dollar chart. If on a 15-minute time frame, the source of this data is the broker called Oanda. You can of course use any data source you like there. For the convenience, I'm just going to go with Oanda. You can choose the time format. I have a personal knack for using ISO time. It doesn't really matter. For the AI, you might as well use Unix time, of course, so the unified time. And then we click on export. And then I quickly need to change here to a new screen. Give me just a second. We want to fire up our AI. This one here. Yeah, that looks good. So as I said, I'm going to use Claude today. So Claude is a language model. I don't like the term AI so much, by the way. It's a language model. Same like ChatGPT. I'm using this because I think it's especially good for coding exercises. And so I'm a pro member there, actually a max member, which means I have more than in the free version and the pro versions. My chat lengths can be longer. The longer the chat is, the more data this language model has to remember, the more it's prone also for mistakes. And with the free versions, you very quickly hit those limits, which is a bit sad, when you're in the middle of an analysis and suddenly cannot do anything anymore. We don't want this. So the first thing is we want to choose the model here. I'm going here for the most powerful, which is good at more complex challenges. So I think doing something like this, trying to develop a trading strategy, is quite a challenging and complex thing. So I'm using the Opus model, which I think is also just available on the Pro and Max plan here. And then I first want to import my data. So I'm clicking here on plus. I'm going to upload file. I'm going to choose the data that we just downloaded. It attaches there. And then, and this I think is a very important step, is I first want to ask the language model now to have a look at the data to see if it understands the data I uploaded there. So I'm going to tell it something like, sorry, please check the uploaded data and tell me something about it. So what you can see now, it says here, I'll analyze the uploaded CSV thing. It's usually using JavaScript, which would not be my preferred coding language. I'm more of a Python guy, but whatever works. And kind of interesting. So it goes into the process that I manually would also do. So it's having a look at the first 500 characters of the file to see like, what is this data all about? What can I derive from the data? And so it has a process here. You can see also here in the second one, when it encounters an error message, and this is something new. You didn't have that like 1.5 years ago, for example, that it corrects itself, that it's not going to tell you, oh, I encountered an error, please help me. It's able nowadays to correct itself. So this is something pretty cool, in my opinion. Yeah, we are going to talk later about gold as well. And don't worry about it. For now, in the first part of this live stream, we are going to try to build a trading strategy. So you can see it's quite complex already, the way. And it's funny, this process of analyzing the data, of making sure your data is also okay. There are no missing rows or whatever. It's not damaged, by the way, which could be very detrimental if you want to develop a trading system with this. It's all doing this for this process alone, even for a seasoned coder already, is normally something that will eat up at least half hour to 45 minutes, if not an hour, if you started from the scratch. So let's see what Claude wants to tell us about our data. So it correctly said, oh, this is the gold spot price. XAU US dollar on a 50-minute time frame. It's data from 1st of August 2024 to 16th of June, so today 2025, over 20,000 data points. And that's going to tell me something about gold, that it has a significant price movement. Well, we know that as well. It correctly identifies the technical indicators, so that we have a moving average and Bollinger Bands attached there, that we have an RSI, that we have the stochastic oscillator with a percentage K and D correctly. We have the MACD, and that we have a divergence signal. So that's something new already. Probably he derives this from the MACD, I assume. And current. This one is important. The data set is very clean, with 99.9% of rows containing valid technical indicators. Only the first 14 rows have NAN values. So if you remember, when we went all the way back, there was like Of course, like an RSI that is based on a data set of 14 candles needs 14 candles because it can show something. So this is the beginning of a data where you don't have data yet on every single indicator. Good. One thing I want to do now is I want to tell it that the moving average has a length of 200. So the moving average has a length of 200. You can see already I'm not prompting it like in a way that I tell it upfront, like, oh, here's your data, do this, do that, and then show me a trading strategy or whatever. I'm doing this step by step, because one thing I noticed about those language models is that when you give them all the information in the beginning already, that they will most likely screw up at one point because it's getting too complex, because it's also getting too well, let's say they are getting lazy. They are limited in the amount of resources that they can give to you. So once that is done, we are going to ask it to test a trading strategy. What should, with all these indicators, be a trading strategy you like tested? Is there any idea, or should we ask maybe the AI to find like combination of the technical indicators that give us an edge? Good. Very important step here. As you can see, thank you for the clarification. Knowing that the moving average in our data set is a 200 period average is quite significant. Let me analyze what it means for our data. It's not so interesting right now. For me, it was just important that the language model knows that the moving average in our data is a 200 moving average. And it's very funny that he already anticipates kind of what we want to do. So he does a recent trend analysis, MA crossover activity, which is something I'm sure a lot of you guys also have tested, and trading implications. So what is currently going on? Now, the next thing we want to do, we're not going to do ICTs or some advanced concepts here. We're really starting at the beginning. Now, with everything, if you pay attention today, this is something you can, in the next step, do for yourself. But not everybody here is interested in ICT, honestly speaking. So please understand this. All right, so I'm going to start now very broad. I'm going to ask it now, if we have a look at all these indicators, please analyze for us if maybe there is in the combination of indicators some edge. This is very broad, not something my usual way would be that I have an idea for a trading strategy already and then ask the AI to analyze this trading strategy with a data set. But since we added a bunch of indicators that were provided by your ideas, we might have a more broad go about strategy here. So let's prompt it like this. I want you to take a deeper look at all the indicators of the data set and help me to find combinations that give us an edge in finding a profitable trading strategy. So this is formulated, of course, in a very broad way. I have no idea what the outcome of this is going to be, but I'm sure it's going to take a while. So let's see if he kind of understands what we want. Analysis of all the technical indicators in your data set to identify profitable combinations and patterns. Let me start by examining the relationships between indicators and their predictive power. So that's kind of cool. And so while this is happening here in the background, I will want to switch, because it's for sure going to take a while. It's quite a complex task. Let me switch back to the charts, and then we can have a look at what is recently, for example, going in on in gold, and I can share a bit of the strategy I'm manually trading today. All right, so yeah, for gold today, here we go. This one here. I haven't traded manually today, I have to say, because I was a little bit late this morning, but we have, and this pretty much sums up what we see on the stock markets as well. We have a nice downtrend. This is just a short-term downtrend, of course. This is why I like Renko charts also so much. And so at the moment we are talking about my preferred trading direction in gold would be short. Every point on here is from my own trading system, which offers an opportunity to scalp the markets for 5 points. So this worked out very beautiful this morning. One thing you want to have an eye on is if the correlations always mix up. So is when you see a downtrend, for example, here in gold, you want to see an uptrend in, for example, the NASDAQ, which we are seeing, the S&P 500, and also, of course, Bitcoin, which we're also seeing at the moment. So gold is going to normally do the opposite, is the inverted correlation, if I want to put it like this, to what we are seeing on the indices, what you are seeing on Bitcoin. So this is very much intact. We are kind of getting out of this window slowly now where my personal trading strategy is profitable. So going from 12 to about 4 p.m. today, that is Central European time, I will not trade. I need to wait a little bit for the US session to come in again, and then we're going to be profitable. What are you guys currently in there? Are you guys currently in a gold trade? Or are you, for example, in the euro or something? Oh, we're in the euro. We are now at a level that we haven't been since October 2021. So for the last 3.5 years, that's quite significant. Let me see what our AI is doing. Still analyzing data. Yeah, that's okay. That's a good thing to do. Using a demo account to learn first. Next thing you should do then, once you feel a bit comfortable with a demo account, is to buy an evaluation account here from The5ers to see if, like, under more realistic pressure, you can earn money with your trading strategy. We have Cobus here from the 50 AMI SMA on the hourly chart. So that would be, let's add that quickly here. Why don't I have my indicators here? Go to make that one green. So you are trading the bounce back here onto the 50 SMA. All right, I can see that Claude has done our analysis. So let's quickly jump in there and see what the outcome was. Good. Cannot forget to add this. So quite some analysis going on there, as you can see. So it had to recode and analyze. That's the verb I was looking for, the data quite a number of times, and it gives us now a report, executed summary. So after analyzing, let's go through this, like through all of this, and then we can see how to go on with the development of our trading strategy. So after analyzing 20,580 data points of 50-minute gold dollar trading data spanning from August to June, I've identified several profitable indicator combinations. So that's already something nice and positive that provide a statistical edge. Now remember, we only have those indicators now in the vanilla version, so we didn't modify any of the indicator settings. We also didn't tell the language model to look for the best combinations. You know, if we take an RSA or 14 or 21 or 30 or whatever. The best performing strategies achieve win rates between 52 and 60% with positive expected returns. Now, this is probably something where some of you might already become very euphoric if you see something like, wow, 60% of positive expected returns. Oh, so we found something that's earning us money. That doesn't mean it's going to earn us money yet. Keep that in the back of your head. So key findings, top 3 profitable strategy combination. The MACD plus a stochastic convergence, the best performer. So it's looking for a MACD bullish cross plus a stochastic bullish cross with a percentage K being lower than 50. And the performance was a 4-period return of 0.02, 8-period return of 0.0357, win rate 60.1%, 63%, risk reward 0.89. Frequency 378 signals in the data set, so that's about 430 signals per year expected. So that's interesting. Annual return about 9.46%. This is, of course, without leverage. And we can double oversold bounce is the second one he found. RSI lower than 30 and stochastic percentage K lower than 20 with an expected annual return of 11.15%. All of this, of course, unleveraged. And the third one, he found a Bollinger Band width of under 60% of the average price plus an RSI within 0.2% of the moving average, which should give us a return of 9.8%. This is, of course, not taking anything into account when it comes to spreads, when it comes to trading commissions, when it comes to slippage, and so on and so forth. So there's a more detailed analysis now. And so what we could do now is we could, for example, say we want to take our 3 strategy. So let's start with the first one, because that has the second one has the highest expected annual return and the most signals. So let's just start with the second, with a double oversold bounce. Interesting also, that's just oversold and not overbought. And we should tell us it now to tell us more about the double oversold bounce. Good. So now it's going back into the data, and we can switch back first to our charts to see what's going on today. So that's the nice thing, you know, you can do that on the side always while you are doing other nice things. Anybody active in euro dollar at the moment, or in the dollar in general? Jonathan is not coming today. He has other things that he needs to take care of today. So today you are with me here too. Left with me alone. You're in my hands. All right. GU today, somebody said earlier. So for cable, pound sterling, US dollar, of course, the same applies as for euro dollar. As I said many times, we are seeing here, if I go to the daily time frame, I mean, it's perfectly playing out what not only me, but also Jonathan, LJ, and so on have been talking about for a while now. that it's looking, at least right now, and we always have to take this with a grain of salt, because there's Donald Trump who could say something that messes things up again. But for me, that's the best trade at the moment. Would only be looking for setups that allow me to short the dollar. And here's also something where, in my opinion, something like a Fibonacci retracement come in very handy, because I was actually talking about this last week, where I said we have a little bit of difficulties here, that is for the dollar index, to go underneath the 61.8 retracement. But, and this is exactly what happened last Thursday, we went under, we had the retracement back up to the 61.8 retracement. So that was the area where you should have shorted the US dollar again, where you should have sold the US dollar. So you should have bought euro dollar, you should have bought cable, for example. And I wouldn't be surprised if over the next weeks and months we see the dollar index more heading into the direction here of the next retracement, which is around 94.5. Now, this doesn't mean it's not going to be volatile, you know, so you don't want to go all in, of course, but that for me is the direction that, at least for me, that I'm trading, for example, with options at the moment. Yeah, baby, I don't know. Jonathan might be busy with installing his new graphic cards, so he can finally do some analysis with his own power, with his own computer when it comes to AI. I want to have a quick look. Yeah, okay, we have data now again from our model on the trading strategy we identified. So let's quickly swap back to the language model. Here we go. All right, so deep dive into the oversold bounce strategy. The double oversold bounce is a mean reversion strategy that capitalizes on extreme oversold conditions in the gold market. It combines RSI and stochastic indicators to identify high probability bounce opportunities. As we saw earlier, we had, with this strategy, 723 trades over 10.5 months. That's quite a lot, in my opinion. We had a win rate, interesting, of 56.3%. We had an average return of 0.047%, which is not very a lot. A profit factor of 1.51. Average winner of 0.29%. That's decent. And an average loser of 0.26%. Risk reward ratio of 1.09, which is not very high, in my opinion. But then it describes for us here the basic rules. So the basic setup would be an RSI that is smaller than 30. So that's the classic interpretation, right, of an RSI. Underneath 30 must be oversold, is stochastic K underneath 20, which is also the vanilla interpretation, and that both conditions must be true simultaneously. So it's a contrarian strategy. And enhanced variations, that's interesting as well. A quick this is very interesting here. Quick recovery setup. So it gives us an idea also how to modify that strategy maybe already. It says, like, if we add a MACD histogram that is higher than minus 0.5, we can up our win rate to 77.3%, which with but it's less frequent. So we only have 75% of those trades in our data set of 10.5 months, or ultra oversold. So that would be the basic strategy, a little bit on steroids. It says you could end a trend filter, or you could also utilize the Bollinger Bands. And this is now interesting. This is what I like about it. Gives us an idea how this is going to perform over a period of time. So how long do we hold the signal? And you can see here, ideally, if we go by the average result, that the performance increases very much if we hold on to this for a longer period of time. So you can see if we just hold on to a trade signal like this for 15 minutes, we have a win rate of 53.1%, but only a very small return. So once we get into this time window of 12 to 16 hours, the average return massively increases. Best months, worst months, average trades, and so on and so forth. So that actually looks pretty decent in my opinion. I don't want to go through it all. Now, one thing I would do now always is that that you should check on how do I get away? How do I get this banner? I don't know, Jonathan, if you're watching, maybe you can get away with right now creating a trading system with AI banner, because it takes up so much of the screen here. I don't know how to do that in the software. And so one thing I would do now is I would tell the AI, please simulate an account with this trading strategy and take into account commission and spread. So that would be, for example, simulate a trading account utilizing this strategy and take into account a spread of let's account for slippage as well. Let's say 0.5 US dollars per traded ounce of gold plus a commission of $4 round turn, which means like opening and closing the position already, per traded ounce of gold. So let's see if we add now the spread that also incorporates slippage already. We do normally at the 5ers don't have a spread of 0.5 US dollars. It's of course lower than that, but we want to account a little bit for slippage as well, plus the commission of $4 per traded lot. No, it's actually per trade, per lot. Yeah, it's per lot. But I said now per ounce. Okay, so it's going to be a little bit higher than this. And let's see what the AI can do with this. My initial bet now would be that our trading system, either the AI is not going to understand what we want from it, or it's going to, the trading strategy is going to become not profitable anymore. So it's going to take a while again. Let's head back to our other charts. Here we go. Yeah, but it looks, if you look at this here for gold, for example, now this is a 1 second Renko chart. The Renko means like each one of these boxes, the chart is not updating itself until you see a price movement of $1 to the upside or $1 to the downside. $1 to the downside, you see a red box. $1 to the upside, you see a green box. As I said, this is updated every second. But what you can see, this is something we see very, very often, is a flattening out. Yeah, we had a steep downtrend and now it's beginning to flatten out a bit. And this is something we see very often. So this is something you can rebuild, for example, if you don't like Renko charts, also with moving averages. So if you go, for example, do I have a chart open for this already? Let's take this chart maybe. I go down to the 5-minute chart, for example. I don't want here any of this. And you add some exponential moving averages. I like to add 3 moving averages to the chart, and one with a length of 200, which is going to be our baseline. One with a length of 50. Which we're going to do in red. Here we go, and one with a length of 21. Going to make that yellow. Here we go. Then you can see this. Maybe if we go a little bit lower even. Yeah, I think here on the 1 minute chart, you can see that even better. That you have like, you guys, if you have been watching this more frequent when I'm on, you know that I always like to trade high momentum pullback on those 21 and 50 EMAs here. But you can also see that over time, this whole thing flattens out. So sooner or later, you're always seeing the price pulling back to the 200 EMA. And this is then not the time, in my opinion, to re-enter trade. So I wouldn't trade any of those signals you see here, because I see on the 1 minute chart, you can do this with the 5 minute charts, of course, as well, that we are slowly flattening out. And this is very normal. So especially for the European session, you will usually see in the early European session, so between 8 and 9 a.m. CET, that the market moves a little bit with more dynamics. And then as we approach 12 p.m., the trend kind of flats out on a normal day. There are, of course, exceptions from this rule. This is why it's so important to kind of respect, to take into account that there are sessions every day on the markets where you can trade with more confidence, where trading systems tend to work better, and that there are times of the day where trading systems tend to underperform. So not every trading system is performing equally well at every time of the day. So I think we have our analysis now from Claude again. Let's see what our backtest has been achieving results-wise. Let's see. The strategy is not profitable with a given cost, like I said. It's heavily unprofitable, 66.32% loss. Total cost 4 point. That is average trade position value. Yeah, that is not correct here, because the cost is per 100K. So I need to do that again. Correction. The cost is the cost of $4 commission is per 100,000 US dollar trading size. So this is one of those traps, you know. I gave false information, of course. And of course, then I don't get a result that that is going to be profitable. So let's see with the correct costs how that is, and then we head back there. Here we go, back to our chart. So yeah, the flattening out. But again here, and this is, I've said that very, very often. So what you see here, at least on a 2 minute basis, is the basis for my trading strategy. So for all the points you see here, except that they are displayed here on a Renko chart, but it's usually really the good momentum breakout, like we saw here. We saw really a trend establishing itself, and then all those pullbacks, either to the 21 moving average or to the 50 moving average, like this one, for example, are, in my opinion, good short signals. And then you can always apply like a good, if you want to trade with a good risk management, you can take a trade like this, where you say like, okay, my stop loss would be slightly here above. Yeah, thank you for adding my chart, Jonathan. I fell for the trap again of not adding the chart. So let me tell you guys that again. It's you always have to do a double click nowadays with this weird software here, and this is something I forget sometimes. So as I said, a good momentum break out to the downside, which we saw very early this morning, and those, especially those pull-ups, in my opinion, to the red moving average, which is a 50 MA, those are really, really, really good chances to have. And all you need to do then, in my opinion, is that you you measure where is my where would my stop loss will be, where would my stop loss be, and maybe then see like where is my risk reward ratio at 1.5 or maybe even 2. And you can see this trade went all the way, if I just count the body of a candle, down to a risk reward ratio of 2.81. I mean, you really just need 1 or 2 of those trades per day, and then you can have a number of losing trades and still earn money. This doesn't work every time. Be aware of that, of course. But the edge really is here, and this is the base for what you're seeing here. The edge is in measuring the slopes of the moving averages. The slopes of the moving averages and the momentum when the price pulls back to the moving averages. All right, now we can go back because our A is done, and I think it found something nice for us. Now I should not forget to add this again. Here we go. So with the corrected commission structure that I applied, Claude is now telling us, wow, the commission of $4 per $100,000 trading volume and not per ounce traded changes everything. So with just the vanilla strategies, so just with the findings we have here from Claude, it's still writing here, so let's here we go, it's done now. It seems like we already found a somewhat profitable strategy. Whether this is a good strategy or not, or something you should incorporate, this is a whole different story. Daniel, I'm using Claude AI here, but you can do this same with ChatGPT. Claude AI is just my go-to tool for doing something like this because I think it's a bit better in coding. So we have an average return of 0.047%, 100 ounces. Position size sounds a little bit too high in my opinion, but it was something we could correct, of course. So but only with these minor adjustments we did now, we found already a combination of indicators that could, according, if we want to believe the analysis, and of course we need to do more testing here, also would result in a positive yield for us. So it started with okay. So the base strategy, I was a little bit confused now, would still yield a loss, but if we put a conservative 4-hour filter, this is what we saw, what we talked about earlier. The longer the holding period, it seems, of a trade is based on this double oversold signal, the better the performance it's going to be. We are going to end up with a net result, with a positive net result. So I don't want to go through everything. So but this is the nice thing. He's going to make us more recommendations also how to tweak this strategy further to get even better results. For example, to add a MACD filter strategy, which reduces the trades but puts our expected end return to much higher of what our base strategy is. So you would go through this now, see like, okay, which is like the best approach, the best modified approach from our strategy. For example, to add the MACD filter that he said, or to go to a 12-hour holding period, which results into a 44% annual return on investment, or 16-period hold, which is aggressive, 67% annual return, and so on and so forth. So what you would do now is you, for example, would choose here and tell it, okay, summarize, for example, the individual steps, what I should look for the let's go here with a 16-period hold strategy. Summarize for me the steps of how to filter signals for the 16 period. So 16 period refers here to 16 times 15 minutes because we are having a 15-minute chart. So of course we are looking at 15 of 16 times 15 minutes of a holding period. For fit as if of a 16 period aggressive strategy modification. So he gives us so this is what we would look for. The initial signal detection would be, we need an RSI below 30. We need a stochastic percentage K below 20. And both conditions must be simultaneously true. Then we have a time filter. If any signal occurred in the last 16 periods, so in the last 4 hours, if that is true, we have to skip the signal. Interesting. If this is not true, we proceed to step 3, position sizing check. So we calculate the position size, account times 2%, divided by entry price times 0.3%. We ensure that we position size at least 1 ounce, and we trade a maximum of 100 ounces, which is a lot already, of course. We enter the market when all conditions are met. No additional filters needed for the aggressive approach. Record an entry time to enforce 4-hour spacing. Exit management, hold for exactly 16 periods, 4 hours. No early exits until unless stop loss is hit, of course. Exit market after 16 periods, regardless of profit or loss. So there's not a set take profit, but the take profit is defined by the period. So we exit the market after 16 times 15 candles, so after 4 hours. The key differences from the base strategy is that the expected return is much higher, so 0.1% versus 0.047%, 2 times 2 better, but we don't need the MACD filter. And there are, of course, also optional enhancement. This is interesting. So it's quite a number of signals, about 820 signals per year. A net return of 0.08%, 61% win rate, and a 67% annual return potential, which is interesting because we took already into consideration, of course, our trading costs. Now, what we could do now, at least this is what I like to do, is that we could tell them, I want to have this as an indicator or as a script for Pine script that shows me, for example, with an error on my chart whenever a signal occurs. So we're trying to implement this now as a last step to visualize the whole thing on our trading view chart. Please code this strategy in Pine script so I can simulate it in TradingView. See if he understands us. It's probably thinking now, why are you eating up so much of my resources? All right, so while Claude is thinking, we are going back to manual charting. Good. Let me quickly throw through your questions here. Good morning from Malta. Nice. NASDAQ. Hartig is looking at the NASDAQ, and I again didn't add my chart here. Let's have a quick look at the NASDAQ. I think that's a good idea. NASDAQ. Here's the NASDAQ. And you were looking at the 15 minutes, I suppose. Outside bar. So I think you might be referring to this one here, right? Crude drawing. Is that correct, Habib? Yeah, it's respecting it, but it's interesting. Yeah? You can see also, hold on very quickly. You remember the EMA, so exponential moving averages I added here. This is exactly actually what I'm talking about. When I said we want to look for the momentum of a breakout So momentum of breaking out, in this case, over the 200 EMA. And then we have a pullback to the 21 EMA. Now, the only thing I don't necessarily like about the setup very much is that we have the 50 EMA still trading below the 200 EMA. So I would rather prefer to see them both trading underneath the 200 EMA. So a bit like what we saw, for example, here. Although these were not really good signals, you would have probably ended up with a loss here, but this is what I would prefer to see. But it shows again how price respects those moving averages. And for me, this is especially true for those 21 and 50 EMA. So what is the best to use, EMA or SMA? Whatever works for you. In general, in my opinion, if you are more looking into short-term trades, I think I personally think EMAs, exponential moving averages, work better because they the recent price data has a higher impact on where the exponential moving averages price is than the data long ago. So if we look at the 21 EMA, like the last 5 periods, the last 5 times 15 minutes on our chart here, have a higher impact than the data that was 21 periods ago, for example. However, there are plenty of people, of course, also that prefer to use simple moving average. So whatever works for you, like a normal 200 period simple moving average on a hourly, on a daily chart, can be a very, very powerful tool if you combine it with zones of confluence. If you have like this one trading, for example, exactly at Fibonacci retracement, at weekly highs or monthly highs or lows, this can be a very, very powerful tool. So let me see what our all right, so we finally got a result here from our beautiful Claude AI. Let's see what it coded for us here. So remember, I told Claude now that I want to have, and I need to add it again, I almost forgot it again, that I want to have our findings on the trading strategy, so that double oversold, I think it was called, trading strategy with a holding period of 4 hours. I want to have that coded as a trading strategy for TradingView, because I want to see now on TradingView if that trading strategy works. So let's see how good Claude is in coding for PineScript. So I need to do the following now. Let's quickly check here. So I can copy this code, and then, man, they really should have a function here where you can add 2 monitors and just switch between them. Then I go back to our chart, which was that one here. We were on, no, that was this one here actually, our 50-minute chart for gold. Now what we want to do is we want to click and open the Pine editor, and important here, go to create new, in this case, strategy. We asked for a strategy and not for an indicator, so this is really important. I want to delete everything here, and I want to paste into the code that I just copied out of Claude. So I'm going to do this like this. We can save our script, of course. Double oversold 60 period strategy, sounds good. And then let's see if we get we didn't get an error in compiling, so we're going to add it now to the chart. And here we see the results of our strategy, but we should adjust a couple of things. Settings, inputs. These are the inputs. Initial capital 100,000. So for our data, the strategy would have made $32. So we would need to look of course, more into the details. It can be that there's something wrong with strategy, but just that how can you now export the strategy and actually look what would have. So let's see here for long, and there was a stop loss. Yeah, I think there must be a mistake still, because you can see, well, he had an initial stop loss. Oh, here we had the 16 period. Is that really? So long signal on this candle, and then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So correct. So this would have been like a trade with an actual exit. It looks like it's hitting the stop loss quite frequent, but just that so this is, and of course I said this in the beginning, we're probably not coming up here with a real strategy like within 1.5 hours it's going to work, but this is really how you should go about it. You have like an idea. In this case, we didn't have an idea. We had just added a bunch of indicators. A better way really is here to come up with something like this, to think that, oh, I have noticed, I don't know, whenever we see an outside bar on the chart, there's a high chance it looks like over the next couple of hours, the price goes into the direction of the closing price of the outside bar. I'm just coming up with stuff now. I'm not saying like this is a valid strategy. So you take this knowledge, you go into, for example, Claude or ChatGPT, and you tell it, hey, I have this idea for a strategy. Here's the data which I found the strategy on. Remember in the beginning, after we loaded all of our data onto the chart, we went here to this drop-down menu and we exported our chart data. And then you really start step by step telling, here's the data set, tell me something about the data set. And this is really crucial in succeeding with something like this, don't tell the AI outright, here's the data, I want you to do 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's going to mess up. It's going to get too complex. If you want to say something bad about those AI models, they are very human often in a way that they become lazy if a task gets too complex. And I think this is due to restrictions server side from, for example, OpenAI, when we work with ChatGPT, that they say you cannot use up too many tokens, too much calculation capacity, because it's very quickly getting out of hand when it comes to costs. So then after you back tested your strategy, maybe Claude or ChatGPT is then telling you, hey, this actually works, looks like you have an edge over the market, this would return some money. Then you want to incorporate commissions and spreads because you want to simulate it like correctly, of course, no? And then when this is still profitable, you can, for example, tell it, hey, hard code the strategy so I can look at it in TradingView. Or I want you to combine of all our findings into a custom-made indicator that's going to display an error every time on the chart for me. And maybe then you'll see what we found just now, that for whatever reason, we would need to go into the deep dive, but this would be very boring for you now, honestly speaking, because that would require me to double check now. So I would take the data, for example, the list of trades that I have on TradingView, and I would want to report this one back to Claude and say hey, this is from the code you gave me, the actual trade. Can you align those trades with the trades you simulated earlier based on our strategy to see if there's a difference? Because that would indicate again that either the strategy script is wrong somehow, or that the initial analysis of the AI is wrong. So this is how you can fact check then, is what we found there actually realistic, or is the AI making something up, and what we see here is completely unrealistic and not the truth as at all, because it looks like a bit weird at the moment that it's just 146 trades, when I think Claude said earlier we had 800 something trades or 700 something trades. So that would be worthwhile something. And so this step by step, you can get closer to a strategy that actually works, which still doesn't give you the guarantee that the strategy is going to earn you money. But it's, of course, much, in my opinion at least, correct me if I'm wrong, might be different for you, for me, a much better approach than doing all of these steps manually. Why is that a better approach, in my opinion? Because we very often see, for example, we had this. Where did we have this? Here on the NASDAQ, for example, this, which I think is an outside bar. I'm not completely sure. Please forgive me that I'm not so competent when it comes to candlestick patterns. But for example, here now the idea would be, hey, when an outside bar occurs on a data set and it closes exactly at the 21 moving average, does price usually go up or down? So that would be an interesting question, which normally now you would go manually through the whole data set and draw your conclusions, or you would even do what is worth, in my opinion. You would think like, oh yeah, this looks like nice. Yeah, maybe I found it 2 or 3 times in the past year as well. So this is my trading strategy now. No, don't do something like this. These tools, ChatGPT, Claude, or whatever language model AI tool you like to use. I mean, there's so many nowadays already. This is exactly, in my opinion, what they are made for. Not to take the thinking part of you, but to help you to quickly analyze trading ideas. Maybe 1 or 2 of you guys would like to look into this, for example, to examine if a price of an outside bar closes at or near plus minus X percent or promille or whatever of a 21 moving average. Does the price usually continue into the opposite direction if the candle was red? So if the candle was red, if it was a negative outside bar, does it continue upwards or does it continue downwards? So I think this is how you slowly will get an edge over the market. This is how you slowly can develop a trading system for yourself that actually takes this framework of guessing out of your trading. That takes, that really confronts you with the hard facts, and maybe and this is often for me 9 out of the 10 trading systems that I develop and which I might be very excited about eventually show me, well, there is just information bias. It looks like it just would have worked the last 5 times. You were lucky that this trading strategy worked the last 5 times, but over a course of 1 year of data, or better, of course, even more data of like 500 or 1,000 trades, actually this trading strategy would lose you money. So it's very quickly a reality check, and stuff that took you, I mean, just alone the analysis we did just now, finding that trading setup of this double oversold pattern with a holding period of 4 hours, that would have taken you manually an eternity. That would have also taken you an eternity to code this manually. I mean, once you have the framework for testing something like this in code, it's pretty much the same always. But like, and that's the nice thing, that AIs can give us indications of, for example, telling us, well, this does not work, but hey, I tested variations of a strategy for you as well, and seems like if we go into the direction of adjusting some of the stuff, we might have a better edge on the market. This is really where the true power of AI excels, in my opinion, and this is how I test my trade. I'm not really creating trading strategies with AI, so I have the rules for the trading system already in my head. But I might fine-tune it. For example, like I said earlier, for the trading system that I use here, where every green dot symbolizes an opportunity for a long trade, a scalp trade of $5 in gold. Every red dot symbolizes it's an alarm for a scalping opportunity of $5 in a short trade. This is something you can very quickly backtest. Does this work? What risk management would be the best to apply? Where should I, on average, put my stop loss? Like, for example, for Bitcoin, with the system, I found out that actually with a grid size, I'm usually using 100 here, with that grid size, it's the best usually to trade this with a 2% trading stop. which gives me then a sharp ratio of over 4, which is at institutional, at hedge fund level already. So yeah, I know for many of you, probably this kind of going back and forth and testing and thinking might be a little bit a boring process and outside of what we usually like to do here in terms of live trading. But I think it's a necessary process. I think nowadays these tools make this process extremely easy and extremely doable for everyone. It doesn't mean you cannot like trade manually anymore. Doesn't mean we can take manually drawn support and resistance levels and go about and have our fun with us, and then you know, have our trading. We should actually maybe apply here. I'm going to do this. We can menu. So we had here the stochastic, the MACD we didn't need the Bollinger Bands. So as a next step, maybe that's a good idea. I'm going to further investigate this kind of little trading idea we came up with. I will need some time to look into this and get some ideas on how we can further amend it. Let's see if maybe we can actually develop something out of this that we can call our Monday trading community strategy that we can monitor here and trade live, maybe with an evaluation account. I think that would be a cool idea. So I have a question from Desi. Is that how your name is pronounced? Is trading 5 minutes scalping? Yeah, well, yes and no. Scalping, by definition, at least by my definition, is if you trade multiple positions per day. Like if you, for example, trade 50 or 100 positions per day, that would be considered scalping. Of course, you could get entry and exit signals for those 100 trades per day also from a chart with a time frame of 15 minutes or an hour, 4 hours, or daily. Not very likely, but could be possible. I think the definition is really on the trade execution. Like I guess that was Jonathan making the comment now here. Most likely yes, but depends more on the way you're executing the trade and how long you hold the position. So if you enter a trade and you know your average time of holding that trade is something like 10 seconds or a minute, yeah, then you are in the territory of scalping. But as we see often, for example, with Victor, could also be considered a scalper, but it's more like that he uses like the lower time frames to time what he's seeing, for example, on higher time frames. So that doesn't necessarily mean that is scalping. I haven't very much looked at the questions we have earlier. I think this one I answered already. The AI tool was Claude I'm using. You can also use ChatGPT for that. Yeah, I wanted to have a further look at NASDAQ already also, right. NASDAQ. Here we go. Yeah, that's powerful, no? What we are seeing. I mean, I'm looking now at the daily levels here, and it's so interesting what's happened, and it's so interesting also how fast the sentiment can flip again. Yeah? When we were down here, everybody was afraid, including myself, by the way, that you know, the market is going to crash further, and then we have suddenly this V-shaped recovery. What's important now really is that we see closing prices above this, because that would invalidate this whole area. So by definition, we were looking at a mini bear market in a bull market. Yeah. Lower low, lower high, lower low, and then a break of structure immediately. Very nice correction. So seemingly, and funny enough, you see the same patterns, for example, also on gold. A little bit like these structures here we saw. This one, especially this one, especially also this one. I mean, that was crazy, right? Like a break of structure, a mini bear market structure within a higher, a longer time frame structure of rising prices. If I said it earlier, I said it just now, actually, the same applies for gold. So It's kind of nice to see when we look at gold here. We also always had this consolidation patterns. This one here, and we had this one. Almost like little flecks that gold likes to paint, right? This one even steeper. This one we just broke to the upside. So if, I'm not saying now this necessarily has to be true, but if gold continues what it's doing right now, then we very quickly should see something like this, new all-time highs, and maybe something like 4,000 US dollars. So like if I would engage in swing trades at the moment gold, which I don't do, I also don't trade gold with options, for example. I made terrible experience with that because of the volatility is sometimes really a problem, especially if you are trading this with options. But I, at the moment, always would look for long entries into gold until we really see a major break of structure. And a major break of structure, we probably need to go to the what a crazy chart. We would need to go to the weekly chart. So a major break of structure would at first glimpse be that is crazy. Not even probably prices below 2,550. That would be a major break of structure, my opinion. So where we could expect something like here in 2012 to happen, where we enter a bear market again with, I mean, how much did we lose there from the top to the bottom? It was a correction of 45%. Correction of 45% at the moment. See, it would put us even further down. That would put us to under $2,000. I'm not saying this is going to happen. Please don't quote me wrong, but I'm just showing you this to emphasize, to highlight why I don't like to trade gold if I would swing trade it to the downside. Something else, of course, if we look at short-term patterns like the one here. Oh, by the way, this one is supposed to be good. Yeah, NASDAQ looks to be, at the moment, at least a positive day, guys. We don't have data coming in anymore today. We have retail sales tomorrow. Bank of Japan interest rate decision is going to be a good one. Yeah, nice. So, well, this is what I just showed you the past 1.5 hours. So you might want to scroll back in the timeline on YouTube and look kind of the way I like to use AI to backtest my own trading system. We did it on a very beginner-friendly, I think at least beginner-friendly shallow thing. So probably we covered like maybe 5% of what is possible of doing there. But if I show you everything at once, I think you're probably going to be more bored already than you might be after me talking for 1.5 hours. So let's see. I know a lot of you guys are trading the DAX also, which, funny enough, as a German, I don't trade very much. But look here also. This is exactly what I'm talking about always, the momentum moves. We see, of course, also this V-shaped recovery in the DAX outperforming because of defense stocks. But here the pullback exactly at the 50 EMA. What a nice trade that was. Enter there, 23,327. You're up already 250 points on that one. Well, I primarily use AI. I have some of my own coded, let's call them deep testing platform that I created in Python for myself. But a first indication if a trading system is profitable or not, you can use TradingView for that, yes. But you always need to encounter, like if you get very different results on TradingView than on what you did with a backtest of the AI, like Claude or ChatGPT you are using, then you need to go through the list of trades and compare, did they take the same trades, or is there something wrong either in the strategy code that you got from ChatGPT, for example, for TradingView, or is there a general problem? Let me put it like this. Well, I think if I'm not profitable, I wouldn't be there, and I wouldn't have done this for 26 years. Although I have to say, I'm with 95% of my trades are very, very long-term trades. I'm a fundamental investor, so usually my trade horizon is 3 to 5 years. But I've lately gotten also into more short-term trading. So I'm trading, for example, a gold account, evaluation account, which I haven't shared it today because I haven't entered any trades today, which I usually trade live here. But there I'm also going through the same process like you guys are doing, because I haven't traded short-term, at least gold, in I think 15 years before I started it here again a couple of months ago. So I'm right now going through the same process like you guys are going, trying to find my edge, trying to find a trading strategy that works. I have actually already found that trading strategy now, and now I'm testing it with the evaluation account. 3 to 5 days. I don't know what that means. What you are referring to there. Let's look at some other stuff. Yeah, I mean, this is like, you know, if you, the same chart. No wonder this one. The same chart as in, yeah, just reverse like the like the US dollar index. That's because Euro makes up, I think, over 60% of the US dollar index. No, normally I'm holding positions 3 to 5 years. Did I say days? I meant years, of course, as for my long-term portfolio. Of course, for the short-term trading I'm doing here, for the systems that I'm developing for trading gold, there we are talking about something like an hour, 2 hours, maybe 15 minutes, everything up to, let's say, 1 day of holding the position. I think it would be very boring for you if I enter a position and then tell you, we'll check back on this position in 3 to 5 years. I mean, we could do that, but that's quite a long time horizon. Yes, of course, we have looked at gold already, but let's have a look again. Any specific time frame you want me to look at, Ghost of Me? Look at this here, 5-minute chart again. It's beautiful how simple it can be sometimes. Yeah, we have the momentum with a good momentum, the price followed by the 21 and 50 moving averages breaking below, and then we had those pullbacks here, and especially that's why I like the 50 EMA here. Beautiful trade where you probably would have done something like this, have your stop loss up here, and then you're aiming, of course, with something like this, at least for 1 to 1R. So your take profit would be somewhere down here at 3,409. If you want to be a bit more bold, your 1.5R would still be over 3,400. Good trade. So of course this one is already in the play, so there's nothing, you know, where I want to trade that now again. Be aware, however, if we see a pullback now again, there's a chance that this flattens out. We are seeing already a bit it flattening out, so you might have to be a little bit patient here and wait until the US markets come in. So probably we are going to see what we very often see with gold starting at 12 p.m. CT, which is right now, that it enters kind of this, you know, boring sideways phase, and then at like 2 to 3:30 suddenly we see larger price swings again. So be aware of it. This is why I said earlier that not every signal is as equally good at any time of the day. So like a momentum breakout, well, you usually see momentum breakouts when there's, of course, enough volatility in the markets. But I would be more or less willing to trade a pullback to the 21 or 50 EMA right now for a short position in gold right now after 12 p.m. than I would have been this morning. This morning I sadly missed those trades because I was preparing here for our live stream. But timing the trades in terms of trading sessions is important. And from my experience, I don't know how true that is now for this specific gold trading strategy, is that usually between 8 and 12 a.m. CET, between 4 and 8 p.m. CET, and then like 2 to 4 a.m. in the morning CET, so the Tokyo session, those are kind of the sweet spots. You want, if possible, to leave out those periods of the day where there's a higher likelihood of the volatility to be less. I will actually, maybe I should conduct some research for you and share that with you guys next time. Like at what times of a day can you expect a higher than average volatility, for example, in gold? Because as short-term traders, if you really want to, scalp the markets, you want to make sure that you are in these areas where, where there is a heightened volatility. You don't want too much volatility, but a little bit of volatility, and not, where things are just going $1 to the upside, $1 to the downside. All right, 25 minutes we have still, and then I'm going to be on my way. Oil, crazy at the moment. Anybody trading oil here? Look at this. Yeah, this is the Middle East tensions. You would like to see that research on that? I will then have that research ready for next week. Not only that, I think it could be interesting also to analyze what times of the day on average are trends in gold forming, for example, because that you could then combine, for example, with zones of confluence. So at a time, I'm like, that's a hypothesis, of course, now, at a time of a day that has an above average chance to start forming a trend, and then you get price action, for example, or whatever indicators you use into that direction to only then enter signals. We have Sir Lancelot wanting to long oil. Yeah, so oil is one of the assets really I never touch. I never touch oil because I'm always losing money with oil. It's a self-fulfilling prophecy by now for me. So never ask me on my opinion for oil. But you could ask me on my opinion for oil, but then you should do the opposite. So I could be your contrarian indicator when it comes to oil. But yeah, of course, the spike we were seeing here is obviously because of what is going on at the moment in the Middle East, especially between Israel and Iran. Iran, of course, a lot of a lot of oil reserves. But one thing I talked about this last weekend with a friend of mine who is actually a heavy oil trader, and he said, "Well, Dirk, the thing is, of course, you never know like how high, how much volatility spikes you're going to see. So when this started, you don't know, is this move going to end here at 68, or is going to extend to 76 where we reserved, or are we going to extend to 80 or 100 or something this even." But he said in general, those spikes we see in oil are rather short-lived. So these are usually not moves that tend to initiate a new or a change in market structure where we move from a downtrend, which we obviously had here from 2022. We came all the way down from over 100 to the lows like 56. Makes you always wonder why gasoline didn't get much cheaper also. And but you see here these spikes, the one we saw back here in 2022. like here, also here, these spikes to the upside, they're rather short-lived normally. I'm not saying we couldn't see a change in complete market structure, but for me, it's highly doubtful if we see like prices up here, like a real spike to the upside. Is that something where I should buy gold? That's probably the better way would be to wait here until we drop to the 200 moving average, for example, and then see if we can find price action or something like this. Yeah. Oh, that was answered already. Yes, you can trade oil with the 5ers. I see so many people asking other traders how long to hold, where to play stop loss, take profit, when to close. The thing is, do what works for you. Exactly that. I don't understand. If you don't try, you won't learn anything. Absolutely 100% correct comment from that lure guide. I think you must be into fishing according to your name and your profile picture. Nice, man. And yeah, that is important. You have to understand everything I'm showing here, everything my co-hosts that are going to come on later here, everything that Jonathan normally shares with you when he's online with me, or of course also without me. This is our way on how to approach the markets. Now, our way of accessing risk and dealing with risk might be very, very different from what you're doing. I'll tell you, for example, I usually trade with a 0.1% risk, which means if I lose a trading position, I only lose 0.1%. There are other traders that trade with 1% or 2% or even 5%, although I think that's a bit high. So there are different approaches to this. There are different approaches of where to put your stop loss. There is no general rule of thumb. And that's the thing of it. I have a real life example, because we are just looking at oil, for example. I mentioned just now, I have a friend who's a heavy trader in oil, who's very successful in trading oil. And he actually tried to teach me his system at one point in my life. And I tried to apply his system, his set of rules, his risk management to trade oil, and I still ended up losing money. Why? Because this trading system is geared towards his personal approach of seeing the market, of risk management, and so on and so forth. So just because he is successful with it didn't necessarily mean that I can be successful with this. This is why everything we tell you here, take it as inspiration, but don't just blindly copy us because you think like, whoa, those guys know what they are doing, I should copy them, and then, I'm going to become rich overnight. You're not. You're not going to become rich overnight by copying us. And even worse, imagine we stopped streaming tomorrow, and then you would be back to square one. If you just want to copy someone, then you haven't learned anything then. So take it as inspiration, maybe as things like, oh, this is a way to look at the market. Maybe I should incorporate this too. Oh, this is how I can test my trading strategies. Oh, wow, this concept of support and resistance is something I haven't seen. Like, for example, before I started streaming here on the 5ers, I'd never seen something like Quasimodos. So what Victor is heavily looking into. Oh, nice. Trading and fishing. Sometimes you cannot. Well, I think fishing and trading have like one thing probably in common. You need to be extremely patient, right? There are days where, whatever you do, no fish will probably bite. And same with trading, there are sometimes days where you wait and wait and wait, and you don't see any trading setup and go home at night without having done any trade. So I very much see the parallel there. Yeah, exactly that. Yeah, that underlies. Well, yes and no. 0.1% is very, very safe. It works slowly because I used to do it. I trade with 0.25%. I do trade with 0.25% on the 20K evaluation account that I use for gold here as well, simply because otherwise the position size would be under the minimum position size that I trade. But even with that, it all depends. Like if you have a trading system where you need to account for that you might have like 5, 8, or 10 losers in a row. And when you then risk, like, for example, 2% per trade, then you very quickly get into a situation where you have an account drawdown of like 10 or 15 or 20%, which is horrible. No, it's of course something you still can recover from, but I noticed in the past that once you see like those drawdowns of 20, 30, 50%, that suddenly, especially beginner traders, start doing crazy things because they have then in their mind, I need to recover that account as fast as possible. I need to get back to break even and start making decisions outside of their normal trading strategy, aka dumb decisions. But yeah, I agree. We were talking about this last week, also like how can you overcome this fear of losses, this fear of entering trades, where I said you have to start accepting losing amounts of money that don't bother you too much. Like if you lose like $50 in a trade, you might think like, oh well, not that bad. Who cares? Not saying like $50 is not a lot of money, in some parts of the world. And then slowly work your way up to what does it mean to lose 500 or 1,000. But yeah, everybody is different there. Yeah, we have a very rangy markets. I agree. If I go down a bit to the 15 minutes, yeah, you can see trading view again here. It's like super rangy, huh? Not that much. This is something where we need to be patient. Basically, we are set here between 115.75, 115.86. So within 10 pips for since this morning at 9:45 already, not much going on there. We might have to wait actually for some impulses from the US markets coming in, as we have quite often on a Monday morning. This is like one thing I notice over and over again when it comes to London and Frankfurt trading sessions, that if there are no strong news already or strong buyers that they like to be rangy and then try to copy and become more brave once the US session starts trading. So you might want to wait until at least 2 p.m., probably better 3 p.m. in the afternoon, until probably you're going to see some price action there. Of course, you could always say like, oh, wow, if we see here 70 where our 21 moving average is trading right now, I might want to jump into a long trade. However, the 200 EMA is also quite a long way ago, quite a long way from where we are trading right now. If I look at a potential long position here, with a step down here, stop down here. So a 1-to-1 risk, well, that's still doable. Would put you to slightly over 116, which is like here the last high. So a bit like, don't know, a 1.5 R would put you up here exactly also to the last high we had 12th of June last week. Not a trade that I would favor, honestly speaking. Same. If we switch here to cable, same. You see the structure is pretty much the same. I saw euro yen mentioned by somebody, which is going ahead a little bit already. So we might see a stronger yen probably at the moment. Yeah. During the time we were streaming here, yen was trending down, so the yen was trending stronger. Exactly what we want to see with our dollar yen long-term short. Why the dollar yen long-term short? I said it, I think we were starting to talk about 3 weeks ago, LJ and I said my evaluation models based on the yield spread between the US and Japan shows an overvaluation of the US dollar at the moment. We should see actually prices around 135 to 130. If we look at the next 3 to 6 months, this is why I'm short dollar yen at the moment in a long-term swing trade, which I didn't do in a spot position, which I traded in an options position. Yeah, talking about the yields, both of them, of course, we should go for a daily chart here. Also not so much news there. Bitcoin also waiting for impulses. What would be important today, and this would reflect also on what we see in terms of US dollar trading action, Bitcoin or crypto in general, would be that we see the S&P 500 staying over 6,003. That would be really, really good sign. But in general, don't expect too much volatility this week until we have the Fed interest rate decision out of the system, especially on what Jerome Powell is going to say 30 minutes after, in this press conference, 30 minutes after the decision. This is going to be extremely, extremely important for the markets because they are right now. Do I have the data here? I do have the data here. Let me switch over very quickly to a different chart. So this one here, essential. When can we expect a new interest rate decision or lower interest rates? As a matter of fact, you can see 99.8% of market participants are expecting that the interest rate environment in the USA is going to stay at 4.25 to 4.5%. Only 0.2% are expecting lower interest rates. When we go a bit further forward in time, you see that this changes over time. So in July, this number of 99.8% goes down to 81%. And in September, it gets more and more likely that we see 55% are expecting interest rates to be lowered by 0.25% there. And yeah, it's pretty much what Jerome Powell has been telling us for over a year now, for 1.5 years, that interest rates in the USA are going to stay up longer, for a longer period of time than many, many people are expecting. And this has become true, which is not an easy thing if you trade on the markets. I'm saying 1% of the 0.1%. First of all, we're saying I'm talking about the account balance, not of our max loss. You mean like the maximum loss you can lose on an evaluation account, right? 0.1% of that would be a little bit too low, I think. But yeah, this is an evaluation method you can also use, of course, to say I only want to risk 1% of the max loss that I have on my evaluation account. Good one. Your risk percent should be inversely proportional to your rate of learning. Yeah, like I said, 1% of the total balance, although 1% can be quite high already, in my opinion at least. But there's a good way. I think Jonathan has shown this many, many times, but nonetheless, I want to show that again. Where is my 5ers account? Oh, I need to restart this one. Give me a sec. Sometimes this software we are using here doesn't like to display the MetaTrader for whatever reason. Let me see if it works now.
Listen up, traders. We got a new competition with massive prizes launching at the 5ers. The top traders, they will win high stakes accounts, and everyone in the top 100 will get a prize, including hub credits and bootcamp accounts. We're actually doing this every single Wednesday, week after week, so you will always have a chance to win. It's fast, it's free, and it's easy. All you have to do is you sign into the 5ers hub, click on the contest on the left menu, and join the upcoming competition. We hope to see you all there. Good luck.
Yeah, that should answer any questions you have about promotions at the moment. So risk-free trading event every week, which you can join, and you can win nice evaluations accounts, hub credits. I think the first 100 always win a nice prize. So definitely something you should do. I wanted to quickly show you this tool, and then my session is slowly coming to an end. When it comes to percentage of risk, there's something called MT5 position sizer. You can find this tool if you Google MT5 position sizer, and then you click on the results of Earn Forex. And with this tool, you can very, very quickly evaluate how much you want to risk per trade and where your what your position size should be. So you select here, for example, what is your trading direction. So let's say I'm looking at a gold chart at the moment. I want to go long gold. I select where my stop loss should be. So let's say we are at 3,414 at the moment. My stop loss is 3,400. Just an example, guy. I can type in here what risk I want. So for example, I want to risk 0.5% of my account balance, which is at 20,619 here. So my risk in US dollar would be 103 US dollars. He then calculates the correct position size based on the current market price. So that's nice. Yeah, if the market spikes up or down, this position size is dynamically going to increase, for example, to 0.08 or 0.06, depending on where the market is going. Other metrics, which personally I'm not using at the moment, when you go here to trading, and when you click on trade, you are in the trade. If you have like a confirmation window here, if you click on trade, then it's going to want you to confirm your trade. I don't want to enter trade right now. That's why I'm canceling it. If you unclick this one here, you click on trade, then it's immediately going to execute your trade, and immediately also from the beginning has your stop loss already put in. So you comply with the risk requirements that you have on many The5ers accounts that you, because sometimes, you know, maybe you are busy with something else and then you forget typing in your stop loss, right? Well, that is not what I wanted. I wanted to look quickly for you if there's dollar rand. I think there might be dollar rand. The question, of course, is why do you want to trade dollar rand? I think it's a bit of a odd trading pair that is at times very volatile. But are you from South Africa, Ghost of Me? So maybe that is the reason then. Oh, this one hurts actually, Nvidia. I bought some down here, but I got rid of them at 112 already. Should have held on to that one. I didn't expect, to be honest with you, I didn't expect this V-shaped recovery that we saw earlier. Quite unique. So this one I didn't expect at all. I thought like I'm going to start by Nvidia below $100 and then add to it. Yeah, okay, then it's good. If it works for you, if you're from South Africa, obviously, you know, you have like an information benefit that most of us do not have. From my experience, dollar rand, I used to trade it quite often with options when I was working for a family office. It can be a little bit tricky sometimes to get out of a position when you are at weird times, like in the middle of the night or something. Liquidity can be a bit strained. But that of course might not be the case when you trade like with something like up to one lot or something. But if you have like millions in position size, that can be quite a work. Yes, most parts of today's live stream up to now were actually about using AI to trade. So you might want to scroll back to the beginning of the video and rewatch all of that to learn how to use AI to at least create your trading systems. Yeah, I was also waiting for US and China for the deal, but I mean it happened. If it's like really absolutely true, we don't know, because we have been hearing a little bit more conservative wording, let me put it like this, from the Chinese side than of course we've seen from Trump. But then again, I think 99.9% of the politicians out there, what they say can always be interpreted in a more conservative way than anything Donald Trump is saying, right? Goody. Quickly scan through this again here a bit. Yeah, we gotta wait, really, I think. Yeah, look at the hourly as well. It's like so sideways. Quite a boring morning session here, actually. Forming immediately a pin bar, also nice. So for me, the typical market probably where I would now, after my live stream session is done, where I would go and have a bit of lunch, take a walk, and then come back at like 2:30, 3 p.m., see if I can capture some nice trades there, because it's really choppy, not much going on. Maybe people are sleeping. Maybe people had the same issue that I had this morning, that I had a hard time getting up, which also might be to the fact that I went for hiking last weekend for a 20-kilometer hike, and I thought I was dying this morning of muscle ache. Every hamburger I ate in my life, I regret it at that moment. Yeah, but it is choppy this morning. I see Mike already in the background. Maybe Mike has some better ideas, sees something that I'm currently not seeing, at least when it comes to very short-term trading ideas. We had gold now returning. This is also so typical. Exactly at the 200 moving averages now again. So something very typical we see a lot during the European session. Mike, welcome. Happy Monday. How are you doing, man?
Monday, mate. I'm good, mate. How are you?
Not too bad. We were looking for ideas, but the market is so lazy, so
you're feeling choppy,
low volatile, choppy actually. Mm-hmm. Choppy with low volatility. Of course, nothing that you probably would word it that way. But yeah,
I agree with you. I've been sat in a sell on Aussie JPY for like, I don't know, what feels like forever. And it's just not going anywhere. It's just ranging. It's going into drawdown, then it's going into a little bit of profit, then it's going back into drawdown. It's just, it's torturous. I'm debating whether I even want to hold it, to be honest with you.
Yeah, I understand you.
Because it's looking as if it's going to be one of those days where, you call something and you're like, maybe not. So
yeah, I mean, we don't have any economic data coming in today anymore. We had China earlier, but of course doesn't affect us like for euro dollar or gold or something usually, except we see like totally outliers where other than that, I hope we are going to see some more volatility later. I hope the market is not in the mode like, we want to wait first what Jerome Powell is going to say on Wednesday evening. That would leave us, of course, with extremely boring sessions for Monday and Tuesday. But let's see. Normally, in the afternoon session, once the US is coming in, we should see some more volatility, or maybe even a nice trend forming here or there.
Yeah, it does feel as though, I mean, I woke up this morning, I didn't look at the charts until I came to the office, and only a few minutes before streaming on ABL. And I was, rightly or wrongly, I was thinking, right, okay, we're going to see some big gaps or some big moves on gold. And there was nothing. It was the most pathetic open to major geopolitical news that I think I've ever seen.
Which is kind of weird, no? Like seeing gold down, but we obviously saw oil spiking up.
Yeah, but oil's come back down as well. So it's, I mean, I was saying to LJ earlier, it feels as though Israel and Iran now are just trading blows, right? And until somebody does something stupid or suffer or inflicts a serious blow on the other one, nothing's really going to inflict the markets. It just feels a bit, I don't know, don't you think?
The thing is, for me, like doing something stupid when we talk about those, this situation right now is like kind of a World War III scenario already. So
yeah, well, I think
then it doesn't matter anymore if you're long or short gold or whatever. You know?
I think the way I look at it is pretty much since 2022 when Putin decided to go and invade Ukraine. I think that was really the one of the main catalysts that's taken us onto that brink. Anyway, we've been in a de facto world war ever since in some respects. So it's it's a funny one. It's a funny one. I would have, rightly or wrongly, I was expecting more volatility this morning on gold, but I suppose the way the weekend has played out, it's been right. Okay, missiles against missiles against missiles. No real one-upmanship necessarily. Maybe there's an argument towards the Israelis having slight upper hand. But like with anybody backed into a corner, the Iranians may lash out and may target things like oil reserves or oil shipping lanes, those sorts of things, and that in itself can not only impact oil, but it can impact the wider world economy, because we know that the cost of oil will ripple on to everything else as well.
Exactly.
So it almost feels like we're in a bit of a holding pattern of, okay, let's see what's going to happen here. That's why I feel as though gold came down today, almost as if to say, right, okay, let's just bring ourselves back to a comfortable place where we feel like we could get some buys if we need to, but we could also take some sells if we need to.
What a weird market. Now we don't just have to anticipate like that the orange guy could tweet something stupid at any time. Now we also have to take into account countries shooting rockets at each other.
Yeah, it's it's not a nice place to be, really. But yeah, and it looks as though my Aussie JPY is coming up to retest those highs again.
Okay.
Taking me into drawdown again, and forming a bit of a bullish structure actually. So wait and see if it breaks these highs on the 5 minute. If it breaks these highs, I'll show you. If it breaks these highs here, then I think I'm going to close. My stop loss isn't until up here, but because of the way we've kind of just consolidated down, seeing this push up suggests that we're going to go higher. And the way it is on the 15 minute, this 15-minute candle is not ideal.
In an engulfing pattern almost, not like by the textbook. But
I mean,
like
for me, that's an engulfing to the upside, because you've got this one here that's wicked down, taken the lows. It's come up, it's taken the highs of this inside bar. It's left this one. That's the only thing, is that it's left this one, but by leaving it and then creating this engulfing candle, that's where I'm just waiting to see how does it play out, because there is, I think there are longs available, and I'm waiting for us to actually come down to this area to take longs. I just wasn't expecting longs to come in so soon. So we'll see. It may just be a case of waiting and seeing if I can just get out at a lower price, so the losses aren't as big. And there you go. It's taken that level, which I didn't want to see, but maybe we'll get a bit of a pullback now. And we'll see how that plays out. But yeah, it's a funny old market these days.
It is, yeah. Is anybody joining you today, or are you by yourself?
LJ no doubt will be joining me in due course.
Good.
I know he's been working on a few bits and pieces, but I know if you've got to drop off, then
I want to grab some lunch. I want to have a little bit of a walk to clear my head, and then later at 2:30 I'm going to be back trading or not. Let's see how the markets are then. So
we'll just
everybody.
Don't go climbing any more mountains, all right?
I won't. I only straight lines to it. Hey, LJ, good to see you.
Hello.
And thanks for your attention, guys, today. And take care. See you soon again. Bye-bye.
Cheers, Dirk. Take care, mate. Hello, buddy. How you doing?
How we going? Doing well.
Good. Guys, give us a break. Give us a minute, and we're just going to reset, and we'll be back right after this.
How are we going? I can't hear anything. What's going on? You muted, Mike. You might be. It's not me. It must be Jonathan. He's still muted.
Jonathan seems to think that I'm the one that muted him last week, and it wasn't me. It was you, and I'm getting the blame for it. I think that's totally unfair.
It wasn't me. Why would I do that?
It definitely wasn't me.
Oh, it was you, Mike.
It was not me. I wouldn't do such a thing. I've got Jonathan's back, you know. So
yeah.
So yeah.
How are we doing, guys?
Yeah, let's guys. You know, what do we think of of the new look? LJ's sporting a new look today. What do we think? Yeah, as Shaggy would say, Jonathan. As Shaggy would say. What do we think of the new I don't know, American policeman / Frenchman / Australian,
the shave and the stash?
Yeah, I don't know what's I don't know what to make of the look, guys, so let me know.
I just need to grow out the mullet and then have the stash. Got to grow that down and then be full Australian. All right,
that'll be more like it. LJ looking like $1 million.
There we go. Thank you.
Careful, AJ. It sounds like Jonathan wants something from you. Careful, mate. It sounds as if he's after something there. So watch out for yourself there, mate. I heard Dirk just before I came on saying that the markets are a little bit they're lacking the volatility and the movement that any of us would have really liked to have seen. I am in a sell at the moment on Aussie JPY, but it doesn't look like it is going to move in my direction, and don't quite like the way that it's broken out here on the on the 5 minute. 15 minute doesn't look too bad. I'm going to wait and see how it plays out over the next few minutes to see if we can push back down, but I'm probably just going to close at break even, to be honest with you, because my entry is basically around, where are we? Just about there basically. Take profit. Stop loss there. Take profit down here. We'll see. I mean, I've been in it for the last hour or hour and a half, and it's just been up and down, like a freaking yo-yo, as you can see. I think it's Aussie dollar is still riding high. We're still moving up. So I think that's just the main component that's still giving it lift. Ultimately, I do want to short as well. I think there's potentially another sort of 10 points in the Aussie dollar, up closer to 65.30. It probably looks like the kind of pause point for today. So yeah, similarly, until I think Aussie dollar sort of confirms where it's going to end up, or yen similarly will keep running higher. New Zealand dollar as well is just continuing to kick on. So they're both just kind of pulling each other along with that. Interestingly, gold has pretty much done as I suspected it would done. If you remember, I was talking about the zones of where we were trying to target liquidity from, and sure enough, it came down, took these lows, came up, took these highs, bounced off, it came back down, and now looks like it might make a move higher. So we'll see how it wants to play that one out. Aussie yen, I think I'm going to have to close this at a loss at the moment because I don't like that reaction on the 1 minute, unless we can get a pullback in the next couple of minutes back down. It looks like that 15-minute candle is going to be a nasty one, and engulfing us to the upside. So we'll wait and see. But don't like the look of that at the moment. But yeah, gold, I could see it's probably now taking a punch higher, possibly from here and heading up to this kind of 3,429, something like that, as a possible area.
I agree. That's what I've got marked out as well. Continued rally from here up to about 3,430 kind of area. Yep.
Just doesn't seem to. I mean, it's making a bit of an impulsive move right now, but it doesn't seem to be anything of great significance. No,
it's not. It's not accelerating. Yeah, it's not changing characteristics at all. Just naturally, that was kind of the rebound point. That's kind of that lower level of this upper range that we're now trading in. I think the 200 period moving average came in on the 15-minute about there as well, and it's perfectly just each of those bottom wicks of this recent lower range just here. We've just tapped into it and bounced off every time.
Yeah.
So it very much seems to be just like a, just per the ATR. I think, like we were talking about before, everyone's sort of waiting to see what comes out further. If clearer heads prevail, and maybe that was the extent of it, or if not, and we see another ratcheting up. But even then, until really key critical infrastructure is hit, I think most of the headlines, that sort of thing, will be to a large extent shrugged off. Then obviously we do have a good bit of data on the cards this week, plus the Fed, no doubt.
Exactly.
So similarly to last week and the week prior, with these big news pieces, there has been a bit of hand sitting, and then we get the next day where there's these shunts of activity, and then it ends up going quiet again. So I wouldn't be surprised if we're in for a similar week this week with that, all things considered.
Yeah, exactly. I mean, if you can see here, for example, from the Financial Times, they're saying that Israel's claiming full aerial control above Tehran. These are, those are big statements. Okay, yes, it's a little bit of, you could argue, propaganda maybe to some extent to flex and what have you, but at the same time, it is still, it's still news that should trigger something, but it isn't at the moment.
It's very, very interesting going and looking at any of the things like the flight radars and that kind of stuff all around that area. You can see, you can see
everyone's just leaving things alone. Yeah, no, exactly. So it's it's, as I say, it's a bit of a holding pattern, referring to the flights, hold and, let's see, get yourselves into a position where, okay, if we're happy to see risk come off, then, we're more comfortable for sells on something like gold. If we see something escalate, then we're in a more discounted place for buys on gold, right? I think that's that's the kind of the general consensus for the most part.
Yeah, precisely. I think, Louis, gold long, definitely pretty reasonable from here. I think we seem to have found that base. US 30. I haven't checked the US 30. I'm looking at the NAS right now. As far as, things are pretty quiet just at the minute. But as far as potential opportunities, I would possibly see something like the NAS as a reasonable short from here. There's a sort of a descending trend line that we've kind of created through here. Haven't been able to get beyond it. And just given the things on the horizon, I would be very questionable, dubious as to whether, upside is the next move versus potentially not a large pullback, but a bit of a move down. That said, we're going to have to wait until we come into US Open, and whether, US traders, banks, institutions kind of go like, well, doesn't matter, and just continue the movements from last week. So I think whatever we do see in the US session today will very much set the tone around the forward sort of expectations per any other further headlines, whether they'll actually be taken, with any kind of depth or relevancy, or if it'll just be a flash in the pan, maybe a brief move on the 5-15 minute kind of time frame, and then just gets people just reverse the trade, basically unwind it.
I mean, I do like the look of longs. I can see why Louis in longs on the Dow. I just feel as though we're in a little bit of a, we've taken a step down, we've taken another step down. If I draw a fib on this, we're probably sitting at a questionable level of around about 50. I'm just keeping an eye on Aussie yen because it's making a massive move down, and I might have just done the right thing by sticking in it for the time being.
Yeah, the like I was saying, AUD dollar. If you go check AUD dollar, it's basically exactly that, front running it. Aussie dollar has ticked off pretty heavily there, and then AUD yen seems to be lagging slightly behind as far as the correlation. So it seems to be Aussie dollar that's the main driver at the minute, primarily.
Yeah. I'm going to close that in a little bit of profit.
We can check euro dollar in a sec, my friend Anton. No problem. Hello, Cam. How you doing? Hey.
The Aussie US dollar. The only thing I don't like is it has come back down on the 3 minute, but the way it's just done it is it's just really all it's done is retested these previous areas. And then probably going to, like you were saying, it's probably going to go higher to the 63.30 area.
Yeah.
So I've just closed that Aussie yen trade. I've just closed it there, just in a little bit of profit. But I'd rather take that and say, okay, I've not hit a loss on that one, and see where it goes.
I think that's a good decision. Wait for it to. You'll probably get a corresponding like double top kind of thing on the AUD yen, and then it'll come off. So yeah, like you're saying, Aussie dollar, it's sort of just pulled back. If you look at it on a 1 minute chart, it's pretty much been just green bars for the past 25 bars or something, just straight. So yeah, that slight impulsive pullback is just general stochastic randomness relevant pullback.
Euro USD. We were looking at this. I mean, it literally hasn't done anything since you and I were speaking this morning. That's the we were talking here, and I marked out this area here as the current resistance, and it's done nothing. It's literally done not a sausage. I'm trying to see if there's anything here. No, nothing of interest for me right now. I'm taking it out to the hourly. I mean, it really depends on how this 1 hour closes, but it feels as though actually this 1 hour is bouncing off this here and deciding to try and push higher. It's just this structure on the 15 minute I like the look of in terms of how that has held. So it does feel as though we might get some strength back into the dollar. Let's have a look at the Dixie.
Yeah, I think there might be. I think Euro will tend to consolidate up here. At most, I think you might get a 15, 20 point kind of pullback from here down to about 115.60. But I would tend to say it's likely to just consolidate these higher areas and then sort of build up for a move tomorrow to continue higher. Just per the ATR today, that kind of stuff. We're kind of at the extent of the moves. And I don't think, just like we were saying earlier, it's been a bit lower kind of volatility, activity in the market. People sort of just waiting to try and think about it, try and deduce what the material outcomes of this could be before jumping in, making any kind of conclusions. So per that prospect, I think that's what we will be seeing. I wouldn't be surprised if tomorrow we take another run at 116. Not out of the question for today once the US comes in, but right now I don't see it as extremely likely just yet, at least.
Cam saying he got into silver around about this area here, I guess 34.40. I mean, I don't know where your TP originally was or where your stops were, Cam. Obviously also not sure on kind of the size of your position, but if we look at it on the daily, we have broken out and we've gone for those all-time highs last week. it looks, I would say, I mean, if we were to draw, let's see, draw a fib from here to here. I would say you're already at the 127. So you might want to be careful, you know, just in terms of where you're likely to get targets. If you got in at 34.40, then that's already a great trade. But again, I don't know what your risk to rewards and your strategy is, but looks like a nice trade. I'd be certainly looking to take partials at the very least on this, I think.
Yeah, I think last Friday on the New York session on the Discord that we did cover silver then for a bit, and there was kind of a sort of a wedge pattern that we were forming into this higher range that we now have, and we'd just sort of gone the other side of it. So yeah, I would expect some continued upside. You could see kind of, you know, 37, 38, I think pretty easily. I guess a fair point is that it's held up pretty reasonably, even though gold has actually dipped back a little bit. The dislocation between silver and gold, as far as how silver behaves, is quite peculiar these days. It definitely feels like an asset that is trying to find its own identity per se. The drivers are very odd all the time. Certain things you would think it should sort of move off, it doesn't. Even just playing like a laggard position to gold, almost similar to how Bitcoin used to run and then Ethereum would follow later with like a delayed fuse. Obviously Ethereum these days is kind of in the bin, you know. But yeah, that used to be how silver would work. And normally then you'd be able to get kind of from it lagging, you have that impulse and you would be able to get this like double bubble effect, and it would then often move as much as gold, but then overshoot that as well. These days though, it doesn't seem to play catch up so much with that kind of defensive aspect. I think people have just recognized that gold is the pile driver per se, and that's just where they want to be. Obviously, you got things like liquidity, all that kind of stuff, which more liquidity is sort of generally drained out of silver, whereas you've had more going into gold. So
He says silver is a gold wannabe. Yeah,
it's very it's still a good asset to trade, but it's definitely, basically put it this way, it's much more technical these days than it used to be, having a bit more top heavy like fundamental drivers. It definitely plays out a bit more technical these days, and there is a bit of chop, that kind of thing.
There was a comment on gold, nice hammer to indicate a pullback on gold. I'm assuming you are referring, I don't know these terms myself personally, but I'm guessing you're referring to that one there, if that's your hammer. I'd be less interested in the hammer. I'd be more interested in the fact that you've got this great big engulfing candle to the upside that's about to close.
The impulsive boy there.
That for me is far more indicative of us pushing up higher, at least into these areas that we were talking about earlier. So yeah, it's broken out of this one that we were looking at just a little while ago, as we can see there. It created this one here. So certainly looking, I'd be looking at longs on gold at the moment. I don't think I'd be going very far though. I'd really only be looking for this here. So you kind of got to make a judgment call and say, do you know what? Do I want to be in this? Do I want to be part of this? Frankly, horrible chop. No, I'm not sure any of us really do. Is the honest answer. Looks like Aussie yen is going to come off a bit more, which is annoying. But hey ho. Let's see. It did pull back. I don't think it pulled back to a full 90 on that. Full 50, sorry. No, it didn't. No. But yeah, it does look like we're going to have more sellers coming into Aussie yen. We'll see how far they push down. And if they break this support that they created, it looks like they will. Let's go have a look at Bitcoin. I know that Dirk would have no doubt looked at Bitcoin.
The other thing I will highlight with any of the yen pairs is don't forget we have the Japanese Central Bank Finance Ministry, etc. Tomorrow. So if you are going to hold any of these things, just remember Asia tomorrow will have some activity for the yen pairs. So don't get caught out on that one.
Yeah, exactly. Just looking at dollar yen's showing some momentum down as well. Potentially coming to take this low. Could then be a nice area for buys. Again, just on days like today, I mean, what would you do, LJ? Would you try and trade the range on these sorts of things? Or
yeah,
would you,
probably for
would you rather
today.
stay away?
For today, I would be trading the range, definitely intraday. And then, yes, particularly knowing that tomorrow we do have the, comments from Japan will be coming out. My lean would be that, that will be yen negative. So therefore, dollar yen, that sort of thing, higher. Because once again, they want to start shifting rates, all that kind of thing. But every time they get close to thinking they might be able to, something happens or some other piece of data comes out, which is, put a stumbling block in between that, especially since we saw contraction in Japan prior to the Trump tariffs being put on the cards. So that's not even a hit from that. That was just of its own accord. So at the minute, they definitely don't have any willingness to change policy measure at the moment, or rather, any justification. They would like to. They have the willingness, right?
Yeah.
But they don't have justification to do so. So I would say today's range, you might get a little bit of a further dip. I think that might be met with some buying support for now ahead of tomorrow's meeting and such. However, then any kind of rallies from tomorrow, I would argue, are probably something to fade rather than to pile in at all. Just as we've seen a number of the past times, we've already had these kind of comments again and again. Spikes, sells right off. So you can imagine that they'll just iterate the same kind of things they have for the past, couple weeks, 2 months kind of thing, 6 to 8 weeks. So we'll probably see exactly that. And then obviously you've had everything going on just now. There's going to be various considerations to input prices regarding energy and that sort of thing that central banks and that kind of stuff will have to consider.
I mean, what was it? Jade saying, what if the broker is actually our enemy? I mean, look, you can go into...
Gotta get a better broker then.
At the end of the day, brokers want to make money, right? That's what they're there for, okay? And there are no doubt practices and things that they do to help them do that. There are some that are more regulated than others. Those that are more regulated than others are more likely to be more trustworthy because it's harder for them to get away with any shady business. Yeah. It's like in any industry, right? You can have a really high-class, top-notch product or service or brand or whatever, and then you'll have a cheap impersonator who tries to cut corners and do things the dodgy way. You pay for what you get, that's
a good recommendation on that would be, I guess, track record. There's a number of brokers that have been around for decades, right? If they've been around for multiple decades, they've clearly got a sustainable business, which means they have sustainable client base. That means people keep coming back. versus newer brokers in some weird offshore thing offering crazy leverage and all sorts of stuff. Another thing can be look at can be, I mean, some of them are like publicly traded, for instance. Obviously, if you're publicly traded, you're going to have a lot more scrutiny on your business, on the structure, on how everything works, all that kind of thing. That's not to say as though there's never been a fraudulent public company. Obviously, we all know there has, but it far reduces the probability of that being the case. So, yeah, if you're looking for brokers, that would be one aspect to consider to potentially give yourself more coverage. So.
Yeah, absolutely. Because that's the thing is, you know, the ones that are maybe less reputable will hook you in with offers and deals and you know, better leverage and all those sorts of things. That doesn't mean they're necessarily any good. And you know, that's where you kind of gotta, you know, you gotta do your homework, just like with anything. You know, if you're going to put money into an organization to make money, then you know that's something you've really got to kind of think carefully about, I guess. You know, just like in the prop space. You know, if you're putting, you know, if you're going to put your time and effort and money into trying to pass a prop account and get, you know, get prop funded, you want to make sure you're doing it within a firm that you can trust and a firm that, you know, you're not going to be thinking, oh, are these guys going to pay out or not pay out, and so on and so forth. There is no doubt that there's shady activities going on around the world, but you know, like with anything, you've got to decide, you know, what brand did you want to work with, you know. So yeah. Thatium, I think.
I was going to say that's a pretty good question.
Wanted to ask, when you guys enter position, do you guys mostly wait for position to hit TPs or stop losses, or do you close them in the middle? Because I'm struggling with holding my positions. Problem that I have as well, if I'm honest with you, Thatium, I struggle with that myself quite a bit. That's more to do with, I think, my own psychology. It's probably the same for yourself. You know, if you've got a good setup, then you might want to check what your back testing records show, right? If your edge genuinely is there, then maybe what's getting in the way is you, and maybe you need to find ways of being able to, you know, almost do like a set and forget. You know, set a trade, leave it alone, and you know, let the odds play out, right? If you haven't got that data to back it up, then you know, you'll always be wondering, you know. So yeah.
But yeah, I will say there's nothing wrong with struggling to hold your positions. I would say I probably manually close the majority of my positions, even before stop and before take profit as well. There is a part in that's part of the, I guess, discretionary component to a degree, where obviously observing other market structure, that kind of things, per when you entered the trade, depending how long you're holding it, maybe you're trading very short term, kind of scalping-esque or something, or maybe you're looking over the day or potentially multiple days swing trade. There's always components that can change, right, per when your initial analysis hypothesis as to why you entered the trade gave you that signal, right? So, and it's completely fair and reasonable to then change your mind after. It's actually the hallmark of a good trader to be able to go, okay, no, this was actually completely, you know, nonsense, or it was valid before and now it's not, so I need to scrap it, right? So that's completely fine. The way I normally do it is I'll have a certain stop, a certain take profit, etc., and I'll have like interim levels in between. So if we're approaching either of these spaces, I'm going like, oh, this isn't looking so nice. Do I want to, you know, either scrap the trade for a loss earlier so I'm not taking the full loss, or potentially going, okay, I wanted to hit this kind of higher price level as a take profit, but we're losing momentum. So rather than risking it, just pull back, you know, I'll solidify the profit here. And then you can always take another trade, right? So, you know, there's always another bus coming around. So don't fear that.
Yeah. Exactly. Jade, I mean, I don't know what broker you're referring to, but my first advice to you would be go and check who, if at all, do they fall under any financial jurisdiction, and do they have any kind of license at all? That'll tell you whether or not there may be somebody you can trust. So yeah, I'd be keeping an eye on that. Prop firm versus brokers, Rodrigo's asking. Two very different. Well, you're doing the same thing. You're trading, but they're two different ways to trade. In the sense that, prop firm is to help you get capital that isn't yours, to help you maybe build your own capital. Brokers, on the other hand, you put all your own capital in there. All right, so there are many prop firms out there. There is an endless number of prop firms, and there's an endless number of brokers, actually, in fairness. I think it depends on where you are on your journey and what it is that you want to achieve. Most people would probably start out, or should start out, with prop, I would say, to help you try and build out your capital. I say that, but I'm not sure. I think you can't really get many demo accounts with prop unless you do things like competition, like, for example, the 5ers have at the moment, which we'll talk about in a minute. But a lot of brokers have got demo accounts that you can go into and you can try out and test your strategy, test your edge, and see how you react to the market movements live, and so on and so forth. So brokers serve that purpose very, very well. But unless you're prepared to put in a lot of money, it's very hard to really scale up, and make significant profits like you could, for example, on prop, if you're a good trader. That's the kind of the tricky part.
I would say, like, obviously finding a broker and then finding a demo account which allows you to simulate your trading. You can forward test it, get familiar with the platform or the assets, that kind of stuff. I would put in some hours there, and then once you feel confident that you've kind of got something going on, and you've tried to figure out your approach and everything, and then you can jump into something like prop. For instance, if you're lacking, most people aren't sitting around with like a stash of capital that they can just throw at the market or something. You got multiple 5 figures or 6 figures or something to really trade properly, put it that way. Like, you can obviously throw a couple bucks in there and do some wild stuff, but if you actually really want to make it a consistent thing, where potentially, ideally, at some stage you're going to be able to either replace your income or supplement it very heavily, that it is a substantial part of what you bring in, that sort of thing, then you are going to need some kind of backing to some degree, right? So that's definitely where the prop space comes in and gives you that entry point there, where for a reasonable upfront, you can gain much more per what you've sort of put in. And if you treat it well and not just like playing around and that sort of thing, then that can be extremely beneficial. And quite frankly, I'm sure for many people, and depending where you are and that sort of thing, and what stage of your life and what you've got going on, potentially completely shift your entire livelihood and financial status, etc. So it's a very, very, very fantastic thing, very beneficial.
Yeah, absolutely. Fatim's saying, I agree with you guys, but usually in Europe, even there are many brokers operating in Cyprus or Seychelles, such as IC Markets Global, operate from these regions. So yes, you're right. But the thing to remember as well is that they do this so that they can cover as many geographies as possible, right? So we're talking about CFDs here, and CFDs is a much more I wouldn't say shady business, but it's a much more tricky industry to kind of have as a transparent industry. It's not like futures where you've got a single price, and the price is the price is the price, right? CFDs, every broker has got their own price. Every broker has got their own spreads, their own slippage, all of that stuff, right? You don't have that on futures, right? So yes, you will have many brokers out there that are registered in the Seychelles, in Malta, in Cyprus, in all sorts of weird and wonderful places, right? You've got to ask yourself, do you want to trust that broker?
Yeah, I will also highlight that a lot of these structures that people have, it's not some, there's obviously the very much social whatever thing, or the mainstream thing of that it's all some shady thing and whatever. Normally it's actually, you'll find heaps of like actors and musicians, artists, all this kind of stuff have that kind of stuff set up, especially once you become big. The main portion of that is actually just to do with tax simplicity, because you can have everything go to there. You're not going to have to deal with every single jurisdiction of all their tax laws, regulations. Then you got to pay lawyers for every single, absolute nightmare. And you 100%, even if you try your absolute best to do everything correct, at some point you're going to get burnt just by pure accident, etc. And, just about everywhere in the world is very, very, very harsh when it comes to things like tax and that sort of stuff. So it normally just gives like a central home base that they can bring everything there and then figure out how they need to best distribute it in a measured and calculated kind of manner. So that's normally the reason for that kind of stuff. It's not because they're doing something dodgy. However, obviously, if you are doing something dodgy for the same reason, that's exactly where you're going to go, because you don't have to deal with these things. So normally you'll be able to find out what, financial licenses, that kind of thing, all these brokers have. And, that's not to just trust what they posted themselves on their own website. You can actually go, these are all, public government type things. They all tend to, in any, most developed countries, etc., have, right to freedom of information, this kind of stuff with a lot of these things. So you should be able to look it up per some kind of government registry, etc. Obviously, a lot of them, their go-to, for instance, even if they're some overseas company, is an AFSL, which is like Australian Financial Services License. One of the reasons being that Australia is very has certain rules, and these kinds of, like, that looks good for them. It is also in part that often that helps them with furthering their way into other demographics like Asia and stuff, because then when these people see that, then they'll see it as trustworthy, that kind of thing. So, but I would say go through the list of that, see what they have, see what their track record is.
It's like with anything.
Have they been around for 2 minutes, or they've been around for 2 decades, right? Yeah. So IC Markets, definitely, that you mentioned specifically, is a great broker. I've been with them for over a decade myself now. And they, they're very good. ECN network. So either 0 or 0.1 spread, and you just pay commission.
The other thing I would say is that, we're talking about where are you putting your money, right? We're not saying, oh, where should I go buy my loaf of bread, right? We're talking about where do you want to put your hard-earned cash as a broker. You want to do your due diligence and try and avoid getting conned or drawn into all the gimmicks, all the offers, all the discounts, and all those sorts of things, because that is just the way that it works. Is that they'll want to get you in on whatever marketing spiel they can. So if you're genuinely taking your trading seriously, and you're going to put in your hard-earned cash into, whether it be prop or whether it be brokers, the onus is on you as a consumer to go and make sure that you're comfortable doing it. Go and use.
Yeah, it's like classic thing of never put in more than you're willing to lose, per se.
Yeah.
Right. That.
Yeah.
As ever.
Interesting question from Jade, following up on what we're talking about with the brokers and stuff. Since a large percentage of traders loses, would it be wiser for a trader opt to investing rather than trading, since investing is much easier with much more information? Now, there's then a follow-up question where Thatian then said, Jade, if you open a reasonable risk position on a 4-hour time frame with market bias in the right place, you can hold that position for weeks, just like an investment, right? Jade then replies saying, I think I can't trade the 4 hour because I can't sleep well if there's an open position on my account. So then my question to you, Jade, would be is, if you can't sleep well with an open trade on your account, how would you sleep well with an investment? And what is your aim? What is it you're trying to achieve? Because, you know, people are trading because people want to make money, right? People are investing because they want to make money. But you know, both can be seen as vehicles for doing so quickly or slowly, right? Depending on how aggressive and you know, how good you are, right? But I would say, you know, if you're struggling with, you know, with holding trades and those sorts of things, then maybe investment is the way to go. But you've got to be able to figure out a way of just stepping away and saying, no, I'm not touching this. I'm not looking at it. I'm just going to leave it alone, you know? Otherwise you will just get yourself into trouble, you know? Venetia's always wise man. Let's see what Venetia's got to say. I think if you're a loser, it doesn't matter where you put the money, but if you generate profit, then we should care where the money will be. The question is, what mechanism will give access on your money if you have troubles? Very good point. Very, very good point. You know, if you're, for want of a better phrase, if you're going to approach trading a bit like a gambler, right, and you're just looking to gamify it and gamble it and just, you know, play the casino, so to speak, then you know, yes, you can try and push out, but as Venetia says, when you've won that money, you want to be able to be assured that you can get that money afterwards, you know. It's like with anything, if you want to do it properly, you know, and do it well. You know, the AlphaBeta lab, where LJ and I are building up the you know, a free community, educational community all about trading. You know, if you're not familiar with it, go and check us out. We have got a whole array of people in here that are, you know, going through, sharing all their tools, all of their technical insights, all sorts of different bits and pieces. Loads and loads of stuff. We've got courses in here totally for free, and don't pay a penny. All you got to do is go to the link in the on the screen right now, and you can sign up and you can join us. We are live every day on our YouTube channel. Both LJ and I are breaking down the charts, breaking down the news and all the different bits and pieces. You know, you've got me as a retail trader who has been funded several times but never got a payout. I've been trading for about 2.5 years. You've got LJ, who's been trading for 13 years, had multiple payouts, you know, earned himself a ton load of money in trading, and still walks around with his hat and his mustache on. So, you know, so there's something for everyone in there, right? But in all seriousness, you know, we're building something. And so if you're not sure, come and check out ABL. Right, this is, you know, this is the community by traders for traders, and you know, we may well be possibly the answer you're looking for. You know, we might be able to give you a different perspective on things. You know, the idea is that we want to support fellow traders to overcome those, you know, those mental hurdles, because more often than not, it's a mental hurdle. I think it's fair to say. You know, I don't think it's any coincidence that 95% of traders, or whatever the figure is, you know, are losing money. 95% of our brain power and brain movement and energy and all that, whatever you want to call it, is all subconscious as well.
Yeah, psychology is definitely probably at the end of the day, one of the number one thing that will, you know, either drive you to highs or drive you into the ground as well. And that, if you go look at any, you know, major hedge fund operators or people who've been around in the markets for decades and absolutely cleaned up shop, all the, you know, famous or semi-famous or whatever people that have some sort of notoriety for whatever, they'll also tell you that at some point they've experienced that same stuff and they've completely blown up, lost their face on certain things when they knew better, because they've been doing it for, you know, a decade or multiple decades, and they still just lost it for a second and then were like, and had to come back and reassess and all that kind of stuff. And they have that all the time. So
yeah, absolutely. Henry says, I don't know why have you not managed to train this cat to trade properly? You know, that's what I want.
Dude, she's a terrible trader.
I know.
She's tried, but she's terrible.
you gotta educate this cat better to trade more carefully. You know, better risk management. You know. So,
but yeah, the final things I will say as far as the stocks thing, investing, yes, I think there is a general, the general recommendation for most people would probably be doing that sort of thing. As per you hear any of these big players as well, you know, the general, it's always like, okay, I want to get involved in markets. What should I do? And they say, just go buy an ETF, go buy the index and buy it, and then come back in 10, 15 years and don't look at it. That's probably the best way for the general populace, per se, right? Now, obviously, trading, you can make a lot more money. You are going to make a lot more money if you can actually do it doing that. And obviously, the prior assumption would be that you guys are in here because that's what you're interested in. But obviously, yes, being that it does have that, you know, propensity, that aspect to it, it is also going to be harder. Right, it's not going to be, you know, just going to turn up and that's just going to come for free. There's a reason, right? So the thing is just to learn the differences. Yeah, and like Mike was saying, that does come down to a lot of those psychological aspects with these sort of angst and all these kinds of things, whilst having, you know, money on the table and at risk. You are going to have to get used to that. If it is too angst-inducing, then probably you are either over-leveraged or over-committing whatever personal capital that you have to potentially put towards this stuff. You've got too much on the table. So the first point would probably to be reduce that, and then you can gradually elevate that until you find like a happy equilibrium. And you'll know where at this point you were good, at this point it was too much, and then sit somewhere in between. So that's the best way to go about that. And the final comment as far as brokers and that kind of thing and your money being safe, yeah, you can check all that stuff. A lot of them will be offshore. Like we said, this is for, you know, tax implication, all that kind of stuff. Most of those still will, however, have some kind of regional, you know, office or something where they've built up in the individual jurisdictions as well. If they're solely based offshore, then it's a bit odd. Normally that'll be like kind of the core parent thing, and then they have other bits and pieces everywhere. You know, Apple does the same thing, Microsoft does the same thing, Amazon, and that's all for that reason. And then the further part, as far as security of dollars, you can often find out whether their client funds are kept segregated to the firm's own funds. So therefore, if somehow the firm blows up in its own manner, by its own right, your funds won't necessarily be hit. And then that also then goes back to where they're holding them, the various jurisdictional things with banking, how much protection there is against around that. And yeah, so that's just all stuff to research.
Cartel, love your name. He will not remove that trade unless
he'll wear that. He'll wear that right here.
I don't give a toss.
Have you met Mike?
Right, jump in
Not
and
afraid.
try and troll me. I really couldn't care less. Honestly, you jump in and loll at me, for God's sake. Get out with your capital letters, for God's sake. Honestly, we're having some genuine, thoughtful conversations here, and you're coming in with rubbish like that. Irinyemi's asking, just want to know, what's the ideal risk to reward for a day trader taking the 2 to 4 trades daily? Do you think like 1 to 3? I mean, I'll go first on this one, LJ, but I feel as though that all depends on your strategy. It all depends on your trading approach and what you're looking at, right? If you are, if you're scalping, then a 1-to-1 could be enough, right? It really depends on what it is you're looking at, what asset you're trading, what time of day you're trading. There's so many different ways of looking at it to give you that answer. But also take a step back and think, how much do I need each day, right? Do you need to have 1 to 3 2 or 4 times a day.
Mm.
You know, it depends on what you're risking as well, right? You know, I would take a step back and look at take a look at what you want to do in a month and then break it down. You know, LG's done a great bit of work on this, and I know he's working on a few bits and pieces around this. But you know, rather than trying to think, right, I want this per day, why don't you go and take a step back and say, I want this per year, so therefore I want this per month, so therefore I want this per week, and I want this per day, etc., and do it that way, rather than starting at the bottom and then trying to go, oh, what's, you know, how much can I get up to there? Start and look down and try and break it down that way. But yeah, that would be my take on it. What do you think, LG?
Yeah, precisely. You definitely can. It's going to depend on exactly what assets you're trading. Obviously, for one, you know, to get a 1 to 3, you know, it's going to depend how tight your stop is. Like, where's your cutoff point? And then, so typically that kind of ratio, that isn't a very, anything like 3+ is very, like, that's kind of your top tier type stuff, depending how you structure things. But if you are trading sort of actively every day, that's going to be a very good outcome. So quite often you'll have to settle for a bit less. And the reason for that is just that the market is not going to turn up and give you that every day, right? The market is going to give whatever it's going to give you, and you can't force your desired outcome from the market. So often one way to get a 1 to 3 is by trading something a little bit more volatile, right? So you'll get a higher range throughout the day. However, the trouble with that means same in the inverse, you're more likely to get your stop hit, right? So net, after taking L's on some other trades, you probably don't end up 1 to 3 anyway, right? And then so at that point, you have to start reconfiguring, saying, is it better for me to have the wider stop, larger parameters, and then take the 1.8 or the 2 to 1, or even just a 1.5, just to make sure that, you know, I'm taking profit, trade is hitting, rather than taking L's and trying to have to find another trade. Because if you're also having to find multiple trades, chances are you're finding less quality trades, the more you have to add in order just to keep flat, right? So you could just take the basket of top tier trades that you've, you know, identified and just take them. If you're simply running too short of a stop, you're going to get hit on something that would have otherwise been very quality. And then so to make up for that, you're having to jump into lesser quality trades later on just to play catch up. And then that's when, seeing as it's lesser quality, you also further increase your likelihood of getting hit. And then you can end up just like tumbling down the ladder. But yeah, 1 to 3 on 2 to 4 trades, definitely possible. All depends how you sort of structure it, however, and what assets you're trading in.
Yeah.
So yeah, if you had more information on that, then can comment further on that if you like. But yeah.
Yeah. Not sure what you're referring to, FX. Yeah, waterfall. Okay. If you want to join,
right,
by the way,
he's a bit blue. He's a bit blue.
He's
as he's self-described already.
Yeah. If you want to come in and join the live stream, if you're a 5ers trader, then go jump into the 5ers community onto the Discord. There was a post today. They're looking for funded traders to come and join the trading room.
Yeah.
So you know, go check it out on the Discord. There's details in there. You can send email to Ellis, and they'll be looking for people to come and join the stream. You know, in one of these segments. You know, we're here 4 days a week, Monday to Thursday, pretty much for most of the day. So yeah. Akram saying 1-to-1 trade is so underrated. You can make a living with it. Totally,
absolutely.
Akram. In fact, there are people out there that are making money with negative risk reward. You know, of even half an hour. You know.
Because it depends where you enter. Because if you've entered a 1-to-1 towards the lower band of like the ATR for the day, probability says that you're going higher. So therefore, even though it's 1-to-1, you have to then think, what is the probabilistic outcome of the trade even hitting, right?
Yeah.
So then when you have 1-to-1 multiplied by the probability of the trade actually hitting, it's no longer technically 1-to-1, right? Because this is conditional probability, right? It's like the second derivative of what you're risking per your reward, right? And so that's how, you can make an absolute killing just off something like that.
Exactly. Exactly that.
Throw out some random numbers. You wanted a 50-point stop, 50-point target, right? These are just random numbers. Most people are probably going much shorter term stuff, right? But these are just random numbers. But if you bought down by the low, the probability when you're at major support and stuff of a 50-point stop being hit is going to be extremely, extremely small. So maybe you write that as like 20%. But the probability of therefore a rebound and you moving up and getting your take profit hit at 50 points might be 80%. So your 1-to-1 isn't quite the same. Because if you had a 1-to-2, but then say your probability of it being hit, the stop, is 40%, and then the probability of the take profit is like 60. I mean, you guys can pull out the numbers, do the math yourself, and rework that for your own strategies, but you can see clearly that these two things, that changes the whole profile. Even though the risk reward sounds worse, the overall outcome, because at the end of the day, we're interested in the actual outcome
exactly
of the strategy. Trades.
Light, I don't know if Yasin, if you're around today, if you wouldn't mind just respond to Light with the detail on the rise. I'm not familiar with it myself, but
I believe so. Yeah, I believe it's the rise. Yeah.
So I know they're working on a few other payout options as well, which hopefully going to come out soon. So watch this space. There was a question in here. I don't know who you're appreciating, Cartel, but glad you're appreciating somebody. That's always good to hear. And Le Saint, is it a paid gig joining the stream? I don't know the details, mate. We come in as part of the ABL, kind of our segment on the stream. So best thing to do is jump into the Discord, follow the instructions that are on the post that I think went out this morning, I think it's Ellis, I think his name is, will be able to kind of give you more details to what it looks like. But I honestly,
I got no idea.
No clue. So yeah. And I think, have you guys ever thought that the markets are not random, but they have their rhythm, and you can, in fact, know the bias of the market truly? Or we're getting into deep stuff now.
I got comments on this.
I know you do. That's what I'm waiting to hear what you got to say.
I mean, technically, yes, they are random. Like you can never have a full throughput as to the intent, the actions, the reasoning as to why people are buying, selling. It may be because of forward expectations of news or data or something else. The same thing with if we use a stock, for example, the forward prospects for the company, and you might have a hedge fund manager that's been in it for a while, and then one day randomly he just decides, no, I just didn't like it anymore. You ask why? I just got the feeling I just didn't like, and just pulls the thing, not because of any pure sense or logic. He just got like a intuition or feeling or something like that. Now, with that said, there are like X number of participants in every kind of asset every day. You get these people turning up every single day, and people tend to trade a lot of the same stuff every day. Funds are kind of invested in roughly the same stuff every day. Pension funds, that kind of stuff, have their own fiduciary responsibilities and what is outlined in their, legal prospectus of how they have to manage the portfolio. They can only have X percentage of every single stock or asset as a portion of the portfolio. They constantly have to rebalance, that kind of thing. So you are going to get a certain degree of similar actors within XYZ market, and they are going to tend every day to act pretty similar to how they did the day before, et cetera, et cetera. So it's not, you're not going to be trading one way and then tomorrow just go and do some wild stuff, which is completely flipped on its head. So you do tend to get this slight, almost seeming like they have a kind of a rhythm, or I sort of see it as like their own, almost like mini people. They have their own characteristics and like personalities, right? And you'll see how euro dollar responds to certain things or news, or when it's overextended or oversold. I mean, gold is a good example as well. How it tends to come to a point and where it should sort of, stop kicking on and find support or resistance. It always does this little extra kick and sort of overshoots it and then comes right back very quickly, right? So that is a hallmark of certain assets that like to trade that way. So there are elements of that that you can pick up on and notice. But ultimately, if you were to put some sort of logic or thought to it, I mean, that's sort of why you have X amount of capital, X amount of participants in the similar markets trading in a similar manner. That isn't just going to change every 3 seconds, right? So it's not surprising then that you get some semblance of similar activity until the point when you get a large macro shift, whether it be data, employment, inflation, central banks, whatever, and then that forces a lot of people in a certain market to come into another market because they have to entirely shift, and then you get a bit of a regime kind of change. So you've got kind of new participants or old participants leaving to some degree.
MK, I'm not sure if I follow what you're saying, but if you've got a 5k account, then 1% of 5k is $50. 10% is $500. 0.5% is $5.
Yeah.
Hopefully that helps. Sorry, not 1%. Sorry, 0.5% is $25. Sorry. So hopefully that helps. 0.1% is $5.
$5.
So yeah, break it down. Look at what you want to earn each day or for the month. Break it down and work it out that way. And just be careful of that high stakes leverage, because that stuff is like rocket fuel, I would say. Bitcoin, we were going to look at Bitcoin and then we got distracted, didn't we? Bitcoin actually came and broke down this structure that I had earlier, which I wasn't expecting it to do. I was expecting us to push on up from this area here. We pulled back lower, and essentially just within this wider range. I'm still biased long on Bitcoin, but I don't think I don't think with everything else that's going on, we're just there yet. It might be a bit of a holding period for the time being. I don't know. What do you think? What do you think, LJ?
Yeah, definitely about the same. I think overall trend for Bitcoin is obviously higher. We're getting a gradual sort of drip feed continuing into Bitcoin as a respected kind of asset per se, since we've had ETFs and that sort of thing, and since the market cap has grown large enough that institutions, that kind of stuff, can now see it as valid. And again, that's one of those like legal things per their perspective, that if the market is not large enough hence it's not liquid enough, they kind of can't be in it whatsoever. So that was the critical sort of factor once we got above $1 trillion and had a stable kind of market cap above $1 trillion. So yeah, you'll probably see it just kind of gradually move up or waft around here now. Since those things have come in, there are a lot more ways to short Bitcoin as well. And there will be a lot of people speculating on either side now. And then just gradually, as an asset becomes more mature, you get total less vol. That means lower drawdowns as well, which historically have been quite massive for Bitcoin. But in the consequential lower drawdowns, you also get lower runs. So you're not going to get these same 5-10x runs that just go and go and go and go anymore now that the asset is more mature. So yeah, and then per what's going on at the minute, obviously if you had one thing to buy over another, I think the majority of persons, individuals, funds, institutions, banks, all of them still are going to have a slight preference, of course, to things like stocks and that kind of thing. So seeing as we've seen them at a good discount recently, which we haven't had many discounts at all, especially the past 2 years, we had like 20% year-on-year growth. So if you get a chance to finally jump into something at some kind of discount, you're going to do that. So I think that's mainly what we're seeing right now. Then plus, yes, Bitcoin is still trying to figure itself out as far its own characteristics, whether it's kind of a risk on, risk off type asset. We've seen it move with risk off flows per indices, etc. We've also seen in the past bit when we had some of the Trump kerfuffle with the tariffs and that sort of thing, we saw it move in line with bonds and act more as a risk.
That's such an Australian phrase, that the Trump kerfuffle.
Yeah. Well, I don't know what else, right? The wobbles or something. I don't know, Trump wobbles, right? But yeah, so I think gradually it will continue to climb over time. I think we are establishing a pretty reasonable foothold up here above that 100K. I think it will be gradual, though, that no one's going to really just dump excess capital given everything going on. There's a lot of uncertainty in general across the board. People are very tentatively long, right? No one wants to be missing out right now. There's always a certain FOMO element. Same thing with the stock market, etc. But no one wants to, put the pedal to the floor and just go ham, especially after we've had 20% year-on-year returns for stocks and that kind of thing. Just sensibly, people are going to be looking at that and going okay, what are we going to get that again? Now, entirely possible, but if you're thinking about, risk basis, do you want to expose yourself to that, or kind of wait until you see a bit more confirmation to jump in rather than front running it? So
just
still
looking
looking
at gold,
reasonably healthy then.
Yeah. Still looking at longs for gold. I don't feel as though we've got the full move yet. I do feel like we're going to go higher and come and test these highs here. Had a position, an idea of position earlier, didn't play out. So I've moved it further down, coming into this area with these two highs here. I don't necessarily see us coming all the way down, but if we're going to break this level, then that is going to be invalidating the idea as well. So want to see if we can get any kind of structure, candlestick structure within this area here in particular. The reason for that one is if we go down to the 1 minute, I think it was the 1 minute here, we had this structure here. So this nice engulfing candle that wasn't respected. So I'm expecting orders to be sat in that area. It's tapped into it now. So just wait and see what it does now that it's come into that area, whether it breaks through or not.
I think there's a fair shot we do. I think we're heading somewhere
lower.
For, 33.85 to 90. Just this past while, I would have liked to see a bit more consolidation in that high range after we sort of impulsively moved up. And we pretty swiftly, as quickly as we came up, come right down and erase that.
The only other thing that I could see us potentially doing is we're doing it very impulsively, is whether we can hold this area now. So that idea has been negated, but can we hold this area then? Because that's the other one. Come down, we've got this massive in 1 hour candle that pushed us up. We've then pulled all the way back down again. Question is whether we're going to negate that whole idea of pushing higher by engulfing it and pushing down further. It's got a hell of a lot of momentum behind it. So let's see.
Yeah, I think that's what we're getting. I think we will break this and start to run. Obviously we're coming into support now, so the question's still out. but it's just all things considered, we have every reason to sort of run higher in gold, and we haven't. I often find when the market is telling you that it has every reason to move a certain direction and it just doesn't want to, is generally pretty telling. So
yeah, no, I don't disagree with you.
G'day, Akram. G'day. How are we doing, mate?
Thing for me is that
we're out more of the Aussie slang. I try and avoid it so it doesn't confuse people, but
we are in the last 10 minutes of this 1 hour candle. That's the only other thing, is that sometimes these 1 hour candles on gold tend to be sneaky little buggers. And as you say, we're coming into support. Don't know. We'll see. This last 10 minutes could see a real pump, and then you just end up with this wick on the 1 hour that just sends us higher, you know, to at least retest this zone here. So we will see.
Yeah, I think the main part that I don't like is the 4 hour. So when I look on the 4 hour, I think we've definitely got more downside.
Sorry, let me just go back because I wouldn't want to upset our resident blue dude. For God's sake. Right, there you go. There it is. There's the setup. Right.
Yep.
You know, honestly, mate, if you're in these streams, then you'll know that I have nothing to hide. Right? Absolutely zero. Yeah. I share ideas, I share trade setups. This isn't the signal service. This isn't meant to be, hey, this is how you guys do it. This is, you know, follow me. That's not this. You know, if you want to troll me or whatever, I haven't got the time. I really haven't got the time or the inclination. There's the trade idea that I had. Yes, stop loss got hit. There was another one earlier. Stop loss got hit. Yes. But if you look, the trade ideas are, you know, pretty large, right? 8R. So you risk 0.1% on an 8R. You're getting a nice 0.8% profit. So, I mean, if you want to go looking for people that are going to try and be disingenuine or, you know, trying to, I don't know, sell you something or whatever, then be my guest. But, you know, it's just, I can't be dealing with you, honestly. I really just have no energy for you. Maybe it's because I spent the weekend looking after my kids and I'm shattered, but I really have no time for somebody who wants to try and make me out as if I'm some kind of signal dude that's I didn't hit it, my trade didn't hit, what am I going to do? Let me hide it quickly so you all don't find out that I'm not a genuine trader or something. It's like,
I think you might have an op coming up on your odd yen trade though, coming up soon. We've just hit basically like double top per the highs before. Aussie dollar has just made a marginal new high, so it looks as though we might run to that 65.30 or so on Aussie dollar, lift odd yen up to a little bit higher, maybe 94.10, 94.15. If it can,
I actually think you've got an opportunity on gold now.
Early.
That's a nice opportunity on gold right now. It's bounced. It's still, that area is still valid because it wasn't respected, and you now might get a move on gold. We'll see.
I think odd yen's looking pretty right.
Let's have a look at odd yen. Odd yen, yeah, it looks very, very nice. Did it come down?
So we've got that double top kind of point, and then it's
broken that high. Yeah.
Yeah.
You think the longs are already coming in?
There is a little bit more height potentially on like Aussie dollar, so hence that would draw it up more.
Yeah.
So the question is then we, punch through 94, it's about 94.10 or something. That's why I have my R2 for the day. So that would be kind of a somewhat, blow off top is the wrong word, but a bit of a almost fake out per se, and then potentially reverse from there.
There's
odd dollar keeps pumping. I'm long at the minute right now, so
Thanks, Kelvin, mate. Appreciate it. Yeah, look, guys, LJ will tell you, right? We've got a bunch of people on this live stream that come in, and we've got a bunch of really experienced traders. I'm the least experienced out of all of us, right? But the point that I'm here is because I'm one of you guys, right? I'm a retail trader. I've been trading for 2.5 years.
Man of the people.
So do you know what, Maria? You say don't give them oxygen. I don't care what they think. That's the thing. I don't care. But I also, I would hate to have somebody question, say, oh, look at this guy, he's positioning this and he's selling this and everything else. I'm not selling anything, guys. I'm literally, if anything I'm selling something that's free, right? So the AlphaBeta lab is free. I mean, what does that tell you? But I think it's a shame when you have people coming in into a live stream and try to pull hairs and nitpick and whatever else because they think you're going to be the same as everybody else. Those of you that have been around long enough know that we are not the same as everybody else, and we pride ourselves on that. We try to be authentic, we try to be genuine, and hopefully you guys can benefit from that as well. Yeah, that gold setup could keep going. We'll see. It could finally be that buy opportunity. We'll see. It's taken this low here, and we'll see if it wants to go higher. I don't know. It's just a trade idea. It's not a signal. Anyone that wants to look for signals, go look elsewhere. But yeah. And Rain, I think the key thing is not about focusing on negative people, but I do want negative people that come in here to understand that this isn't a negative place. Especially our sessions where we do a lot about psychology. We try and break things down and look at different elements of people. So yeah, and as Amal says, nothing wrong with constructive criticism, no problem for me. But at the same time, read the room, and learn, learn to see what kind of stream it is and what kind of people we have in here, and that we're not some scammers, So yeah, and do you know what? It's the other thing is that it is really, really easy to jump into the chat and criticize somebody on chat. It's really, really easy. LJ and I and the rest of the team are all here trying to trade live, reading chat, reading all the other stuff. So that's why I said to him earlier, I said to the guy, if he wants to come on and show us how to trade is Blue Lagoon or whatever it is he's got, then bring it on. Come join us.
The offer is there. There you go.
I by no means, LJ will tell you, by no means do I profess to be a particularly wonderful trader or anything else. I'm very much on my journey. So yeah. If you trade with ICT and SMC concept, I'm new here. I don't trade with either of those, Sylvindor or Joseph. I don't trade with either of those. I know a lot of people do. I don't. Never read it, never studied it. A lot of people think that I have or that I do. I don't. I have my own strategy based on liquidity levels defined by specific types of candles on forex.com in particular. Yeah, I look for setups with engulfing candles and wick retests and so on and so forth. So the drilling, who's drilling? Oh, the drilling. Where's Jonathan? Yeah, Jonathan's
he's off for today. Yeah,
he's not around today. He's
got too much other work to do to get.
He's busy looking. He's busy looking for more dump trucks to drill holes in, drill holes with. So yeah, exactly.
Funny, wasn't it?
Thank you, percent gain. That is exactly what we're doing. That's what we're doing exactly. So he will be back. Marina is in with us. Good to see you, Marina. Hope you are well. Yeah, it's he's very, very busy. He is very, very busy. Let's have a look at that 1 hour candle, because that 1 hour candle, it has wicked off a little bit.
That's good, Cam. I'm looking forward to seeing you there on Friday as well.
Excellent. LJ has taken on these Friday Discord sessions, and it sounds like they're going pretty well. So taking it up to a new level, which is great to hear. That 1 hour candle closing as it is at the moment in the next 30 seconds, if we see a bit more of a pump, then it would add weight to the theory of going higher and coming up to retest these areas. So we'll see. Sometimes you've got to have multiple entries. You look at Victor, right? Victor, he doesn't need a high win rate to be incredibly profitable. So Akram, Jonathan's always looking for an angle to make some money. So he's drilling for oil to try and make the most of the current current price levels. Exactly. So,
the gold's sort of sitting on the 50-hour moving average at the minute. We're just kind of hugging that non-stop, sort of becoming gravity for now. So it's whether we can get a close off here. Ours just ticked over. Whether we can rally off this hourly bar and establish a bit of price movement away from that kind of pinpoint. If not, this ends up red, then I think the 4 hour is looking a bit nasty, if that's the case. And that's what I'm very much still seeing as potential. Because if we do happen to come a bit lower, I can see easily that 4 hour bar coming down for 33.90. So I am still just leaning that way, given just the factors that we've had, that gold has had sort of every reason to keep up higher. We sort of haven't. The whole market is basically just erased much of the geopolitical activity that we've had over the weekend and late last week. So that doesn't mean that it won't spark up again. But as far as the sort of consensus sort of sentiment for today, it seems to be unwinding this stuff for now. But yeah, still, if you got your sizing priced out well, then I mean you can keep taking bites at every time we hit that lower support.
Absolutely.
So that's how
so this one
there's not one way to trade. You can there's a million ways to skin a cat, that thing.
This one I did actually take, but the EA stuff that I've been working on with the trade manager. So by the time it got to 1R, I was already at break even. So it's come back down. It's taken me out of break even. No harm, no foul. So yeah. Yeah.
Rain BFX, bro. That's exactly what we were just saying. This is what Markins is considering per him trading on this lower structure. Just as I iterated before, I can see lows coming in. It's going to completely depend how you're trading. Are you trading for the next start? Like if you're scalping, that's irrelevant, right? If you're trading near-term timeframes on the 5 minute or something, it's going to be irrelevant. You're looking for the end of the day into the US session, blah, blah, blah. Now it becomes more relevant, or if you're swing trading. But that's the thing, like everyone here is trading all different approach, different strategy, different setup. Everyone here as well has, might have multiple various accounts running different strategies all at the same time. So yeah, it's not a one fits all, brother. Many ways to trade.
Amen to that. Speaking of different ways to trade, we have...
but yes, Henry. So, sorry.
We have two people that are far less degenerate than I am when it comes to trading. So we have got Victor and Deanna waiting in the background for us, which means it is time for us to bid you farewell, guys. That is the end of our AlphaBeta Lab segment. Before we go, quick reminder, check out the link on your screen right now. It is the only trader community that is for free, by traders, for traders, where we try to provide you as much detailed and useful education that you could possibly get to help you level up and truly become a profitable trader. So make sure you come and join us. We'd love to see you over there. In the meantime, we'll be handing over to Victor and Deanna right after this. We'll see you guys next time.
See you guys later.
Hello, we are live from the remote studios of The5ers. How are you doing, Deanna? How is everyone watching us today? It's a beautiful day. What's up? Tell us, Deanna.
I'm doing well, Victor. Had a great weekend, and I'm excited to be here. How was your weekend?
Awesome. My weekend was filled with quality time, quality family time, which is, very important, if
That's
not
great.
one of the most important things, right?
Absolutely. That's a great way to spend your weekend. And happy Father's Day to all the fathers out there.
I was almost gonna say thank you, but that's not applicable to me. So unless I'm considered, father of my cat.
Good to see you, Marina. There you go.
Yes, Marina, we have the regulars in our chat as well, Void, Manish, and so many others. Thank you all for coming in and saying hello. We appreciate that. I'm watching, before we get to the charts, Deanna, how are you in terms of risk on, risk off, volatility? What are you looking? How do you feel about today, this week? Are you aggressive? Are you a bit more conservative? Are you, neutral in that stand?
I'm the same as always. I'm just trading what I see on the chart and, paying attention to when when high impact news events occur. But other than that, if there's a setup, I'm going to take it and risk how I normally risk. I started trading last night because there was a big move, as you know, in ES. So the S&P made a gap down move yesterday yesterday for me, Sunday night for me, and then price recovered. So I just traded it as I always did, as I always do,
Okay.
and paying attention to the news events coming up later this week. We've got FOMC on Wednesday, and I'm traveling this next couple weeks, so just trying to
Nice.
keep it regular, keep it steady, and just each day kind of take another little nibble. That's what I'm trying to remind myself.
Exactly. You're traveling. That is awesome. How do you manage trading while traveling? Is it something? Is it? I mean, because you don't trade. You're not a swing trader. At least from what I have seen, you're basically going for a couple of hours, I believe, right? Not too long. Is that correct?
I do both. So I swing trade and
Okay.
I day trade. So depending on what account I'm in, I might have a shorter term goal. And what I do is very similar, whether it's day trading or swing trading. And then I even have a long term portfolio as well. So just try to diversify like that. It can be really difficult to trade when you're traveling, but it's also possible. So I just try to remind myself, of what I'm going for. This is just, slow and steady. I traded on Friday and I did not, and while I was traveling, I gave back a lot more of the gains than I should have. So I'm trying to remind
Okay.
myself this week, you're just going nice and easy, nice and steady, do what you do. And I know a lot of the folks on here trade with a ton of screens. I, even at home, trade on a single laptop. I have another computer
Nice.
screen. I don't typically use it. So I'm just on a laptop and I just bring it with me and do the best I can. It's once you have the system down, the process down, it's really more about just trying to keep doing the same thing over and over. And that is where I struggle. And so I have to focus the most as well.
Amen to that, I would say. Once you have the system down, I think that's those are lines for shorts. When you have the system down, it is a matter of execution, and you don't need half a dozen or a dozen screens or even half a dozen screens to execute your plan, unless the plan says for you to look at these many screens at the same time. Usually, that's not even necessary. So would you say that you having more screens would be detrimental for your workflow? Would it be distracting?
I don't think so. I would probably enjoy having more screens. Okay. Sorry. I think for me, I'm not really sure. So I have traded with bigger screens before, but I it's mostly unnecessary for me. What I'm trying to do by what I do and focus on, the S&P, the indexes. I do pay attention to other things, but I think it's best for me to avoid the shiny objects and to try and really focus. And so, I like watching the charts, but it's also easy to get sucked in and get locked into your desk and get stuck there. So if you're finding an opportunity, if you're finding an opportunity a day or a couple opportunities a day, that's plenty to do really well. And so, sometimes I will take a bunch of trades and sometimes I take very few trades. And generally speaking, it kind of comes out the same. So I'm really trying to get better and better about doing less and maximizing. One of the things that I have done that has worked really well, and I really want to make sure I'm locking in on this, is trade until you're green for the day. And then when you're green, maybe leave a runner and then just be done. And that is something that is, for me, hard to do because I would rather sit and continue trading. But it's very easy to give back a lot of your gains. Or something else I'm considering is if you continue to trade, make sure that you don't give back more than 50% of your gains. So what about you, Victor? What do you do to make sure that when you're trading, it's always hard as a trader to know when is enough. When should you continue to press your edge? That's something that's been on my mind this week. How do you answer that question for yourself?
Actually, before I talk about what you just mentioned about not giving back too much, I have experimented in the past with this a lot, and I know where you're coming from, and I know that process, that thought process of that efficiency, and the recurring thing that happens all the time where we execute well, we are super focused, and then later on the day we might not be as good or as focused and we end up giving back, and before we know it, we worked like 3/4 of the day to get the profit, and in just a few, if not one, bad decision that then is snowballed into something bigger, we give back half or even more of that, which is, it doesn't make sense, right? We spend so much time building it up and then breaking it down so easily. So I know, but before I answer that, let's go back to the screen thing. You mentioned that one screen is enough for you because it doesn't you know your process, and your process doesn't require multiple streams. I would want to ask the chat, how many screens are you using? Let us know in the chat. Give us an idea. How many screens do you need? And actually, I want to answer. I want to ask two questions. How many do you have? And on the same line, how many do you actually need? Because there's depending on your process, it probably isn't the same amount, right? You may have a certain number, and really you only need one or two, maybe three. But I would argue most of us will have enough with just a few, if not only one. Let us know in the chat so we get a gauge of our community, our traders in our chat, to see how they are doing. In my case, I think while we are getting these answers from, we have Lexi saying laptop and two. Let's see, we have Zhao, 12 screens. Wow. Jamaica Baker says 6. Dahlia says 2. And I see Henry says 1, only 1, but large. Okay, so probably he has, split that up into multiple sections of a big screen. That's also Cam says most of the time my phone. All right, That's very minimalistic, I would say, right? On the phone, you can't fit that many things like charts. It's probably just maximum 2, if any, probably just 1. So the majority, Venetia says 6, 7 within parentheses. I'm not sure if that means 7 you need and 6 you're using, or the other way around. Let's see who else is. Let's see. We have plenty of messages here on that front. I'm gonna share my idea. I think obviously it depends on what your strategy requires you to do, because in an essence, you're like having more screens give you the opportunity to see more things, obviously, right? You can see, you can have multiple assets there, you can have multiple time frames there, and that can be an advantage, but it can also be a disadvantage if, let's say, you're not too disciplined or you're not too good and focused, because you're going to be having a lot of moving objects or things flashing, that might be distracting you. And in my case, I think I could I have I think I could be I would need probably, I would say, it depends on how you break down how many graphs you have per screen, obviously, and how big the screen is. But I would need uh, three per pair. I need 3 graphs. So I'm trading 2, so I need 6 graphs. Actually 8 graphs per pair, meaning whatever screen I need, how many screen I need for 8 graph. That's it. And if you can do that in 2, you can do it in 4, in 3, in any numbers depending on the size of the screen. And that's it. I don't need anything else. I could, it's not very comfortable, but I could just have 1, right? You have to switch in between. But minimally, I would say I would need at least 2. But I'm using 4 screens because that's just more comfortable in dividing the screen. So I think that's a very useful exercise, because less is more, right? We talk about that a lot in trading, and it's especially true in terms of how many screens you actually need to execute your plan. And I'm consciously not looking at any other things, because I don't want to miss what I'm actually relevant for my trade plan, which is these time frames and on these 2 pairs. So a lot of the times people say something about another pair, and I'm completely unaware of what happened that day, or whatever whatever event or structure pattern, whatever happened. I'm completely unaware of that, and that's perfectly fine. I don't have any FOMO in that sense. That's one thing. So I think it's very important to be conscious about that. The other thing that I wanted to say is, you mentioned the equity P&L during the day, right? Intraday equity graph, P&L graph, which you mentioned you're noticing that sometimes you give back too much at the end of, or later in the day. And I've seen that too in my journaling. I've seen that many times, that as I said, it just take 1 mistake or maybe 2 mistake deviation, and you mess up big part, if not all of what you gained that day. And I actually, I think that there is a natural fluctuation, which is not roughly, but which is just random, right? It goes up and down. If you have a positive expectancy, it should be in the average should be in a. Let me put it on the screen, perhaps, to make it a little bit more clear. What I mean is that this is my theory, or this is how I see it, right? If we have a daily an intraday not target, P&L. I'm gonna use these lines to make it very quickly there, right? So imagine this is the Y and X axis, and what I normally would see is, if we have a positive expectancy, you should have something that fluctuates, something similar to this, where the average right? If you have a positive expectancy, would be sloping upwards, and perhaps that could not isn't that high, that steep. You could have something similar to this, right? I mean, if you have enough trades during that day, you take a couple of losses. Perhaps it's not as beautiful, but I mean, it could have different shapes and forms, and if you it makes sense to me in a sense, to stop whenever you are, you know, compared to other days, right? In comparing the same number of trades you've taken, that you're kind of above the mean, right? And you stop there because it makes sense. And when I was trading discretionary, I used to use this a lot, where I would, have a lot of data, knowing where, given having knowing in advance what my expectancy is, I can, I have an idea. Okay, after 10 trades, I should be this number up, according to the data I have back on my back testing, forward testing, on my data in general. And I would say whenever I'm above average, it makes sense to just stop, because I'm actually gaining on my edge. I'm getting more than I should, and I could just stop. And I think there is statistically, or in terms of statistics, it shouldn't matter, because if everything stays equal, the more trades you take, right? If every trade is actually valid and you have data on it, the more trades you take, the more profitable you should be at the end of the day, the week, the month, etc. But psychologically, it makes a great difference if you're gonna stop in strength, which is actually what you're doing, Deanna. You're by stopping in strength, and even though you might think, okay, this can continue to win some more, but I wanna stop at a positive note. And I think that's very important, or very beneficial for your mindset, even though statistically, it shouldn't matter, right? You have an average, and the more trades you take, as long as they're all valid, you should be just earning more. The other thing is, if it happens very often that at the end of your session, your trading session, you are giving back, probably you should investigate if there is still the same edge at that time of the day. There may be a pattern. I've seen that too, that after a certain hour, my strategy is less profitable. And by going back and looking at at the data, and especially at the time of the day where I enter, I have eliminated these slots completely, because I know that I'm not as profitable. My edge isn't really there. It's just hovering around neutral. Have you noticed that, Deanna?
Yeah, it just depends. And I do want to go back and address a comment that FX Cartel said that you ignored his comment. I don't think he probably did ignore your comment. But there are a lot of comments here and a lot of opinions. And the comment that he's referring to says she seems new to trading using just one screen, because you will need to also look at DXY and correlation pairs. She is new. It's that's just it's very funny to me as traders when you have one way of doing something and you think it's the right way. There's a tendency to think that everybody else's way is incorrect. And, I'm not new to trading. I have a publicly verified track record, which you're welcome to look at. And that's all on one screen. I have other screens accessible to me, and I use only one. I'm not unable to use multiple screens. I choose that. Because I find that that's all I need to be a really successful trader. And so just keep that in mind when you're listening to many different opinions. Live streams are great. Hearing from people online is great. But a lot of times we need to check our opinions and remember that with trading in particular, but in life in general as well, that just because somebody's doing something different than the way that you do it, or maybe you're successful and you're doing it well, and so you think that's the only way. And the reality is that could not be any further from the truth. That's just your way. Doesn't make it the right way. So we didn't ignore your comment. Just, there's a lot of other, I think, maybe valuable comments in there, and that one just didn't get touched on, but there you go. Yeah. So anyway,
Yes,
sorry,
I
Victor,
would say
tell me.
FX. I'll interrupt you a little bit. FX Cartel. To be fair, I didn't read your comment, so don't think I ignored it because I didn't. I simply didn't read it. I was asking you, Deanna, about the. Have you noticed? Have you analyzed? Like where it doesn't matter for your strategy the time of the day of these entry signal. For your expectancy, does it matter?
Absolutely. I pay really, really close attention to time of day. That is one of a key metric that I look at. And specifically, I pay attention to profit factor and how my profit factor varies throughout the day. The key is, though, that you have to have a lot of, you can't just take one random trade at 5 in the morning and it doesn't go well. And then you think, okay, I'm never trading 5 in the morning. You have to have a lot of trades to analyze really what times work well for you. And so I rely on that pretty heavily. For me, the times that are most profitable, so highest profit factor, I do trade the Asian session. For me, that's in the evening. So I will often trade the Asian session, but the most profitable times for me tend to be where kind of the London session and the New York session overlap. So 8 o'clock, 9 o'clock, 10 o'clock, those are really, really great times in the market for the asset that I'm trading, which is the indices and sometimes gold, because there's a lot of volatility at times. There's a lot of volume during those hours. And also I'm awake, right? So a lot of times there's really great trades that take place during the London session, but I'm asleep during that time. The New York, like lunch hour, midday of the New York session can be a really slow, choppy time. Not always, but, has a tendency to be that way. And so that is one of the benefits of doing trading until you're green and then stopping for the day, because you inherently have a protection built in against trading in the chop of afternoon. So for me, what is the afternoon can be a choppy time, and sometimes around the close can be another good time to trade. But again, this is going to depend on your specific style, your specific system. But there are sort of truisms in the market of when the volatility and the volume are there, and that can generally be pretty helpful to know. So yes, I absolutely pay attention to that and break it down by the hour, and also pay attention to the day. I don't incorporate the day as much as I do the time of day. But like for me, for example, I know my best trading happens Monday, Tuesday, Friday, Monday and Friday. And then like the middle of the week is kind of not as strong trading. So I think that is a really great way to improve and sort of like refine what you're doing in the market.
Yeah, I think it's totally actually what you mentioned is very true. In order to do the analysis that I just mentioned, where you can break down the different times of the day, right? The lower graph, both of these are the yellow lines are x-axis, but the lower one was how the development of the P&L during the day or during my session typically is. And what I see is that within the current window that I have, it doesn't really matter, right? The time of it just fluctuates. Sometimes I win, but it doesn't. There is actually a pattern to it. But there is on the time of the day. In my case, for example, it's very funny because you mentioned that the end of London, right? You mentioned the end of London, beginning of New York, right? That is when you have more profitable trades, right? Those are the opportunities for you. Have you noticed, like later in the New York, you're referring to the overlap actually, while London is still open and New York opens, right? How about after London closes, right? So after that would be like 4 hours after New York opens. Do you trade that time of the day? Have you noticed any difference?
That tends to be that's kind of like the lunch hour, the New York lunch hour, and that tends to be kind of a choppier, slower time. So I would not make a hard statement that I'd never trade that, but I typically don't. I typically will try and either start trading the Asian session or the New York session, and then ideally, in an ideal world, I'd like to be done by like 11 a.m. So sort of the couple hours into the New York session, about an hour and a half after the open, because then things start to, quiet down a little bit. Again, not always, but I do. If I already have a win for the day, it doesn't make sense to continue into that time period. So if I don't have a win and I want to continue later in the day, I'm likely to take that period off unless something crazy happens or, something super obvious happens and I'm at my desk. Maybe come back in the later afternoon, like 2 p.m. Eastern time can be, when volatility and volume starts to pick up again. So again, pay attention to it, but mostly, when your best times are, if you focus on those best times, you typically don't need to stray from that, right? If you're already collecting if you have a daily goal or you just want to be green or whatever it is that your metric is that you're using and you're targeting your key times, it's kind of like you don't have to be there for the rest of the day. You don't have to sit there all day. You've already done your work and you can move on.
Yes.
And
Before
also,
we
by
go
the way,
back to the
sorry.
chart. Go ahead.
One last thing. I never said I don't check the dollar index. I just said I use one screen. So I definitely split my laptop and I have different things that I'm looking at simultaneously. As you've seen when I share my chart, I have at least 3 sections. And when I'm not sharing my screen, when I'm trading myself, I have 5 sections. So I never said that that's an assumption that you made. I checked the DXY, but it's also, doesn't have to be a part of what you do. Again, I think that's kind of naive to think that your way is the only way when there are plenty of professional traders that would disagree with that. So
in the end, FX Cartel, we I think we encourage your engagement to the chat and keep that because that's what we like. We want to engage and interact with everyone and you among yourself in the chat. But I do agree with Deanna. It is there are many ways we'll hear many traders say there's so many ways to be profitable, and there isn't, as long as you are, if you're profitable, there's nothing anyone can say that it's wrong, or as long as you're profitable for you, that's right. So if you think that the DXY, and you notice that in your results that is crucial, without that you would not be able to be profitable, then for you DXY is essential. I agree with you. But that may not be the
absolutely.
case with everyone, because everyone has a different trade plan, a different time frame, a different entry signal. And if they are profitable in the way they are, and Deanna is profitable, then for her not having, but you're actually looking at DXY, but let's say you weren't, assuming that you weren't watching, then that's perfectly fine for whoever, right? It's there's so many ways to be profitable. There's a million ways to do that.
And I definitely don't look at DXY on a regular basis. So I'm just saying, to say that I said that I never look at DXY is an assumption and isn't true. But anyway, let's move on. I think
Yes.
I think the point that I want to get across to everybody is online, lots of people have opinions and lots of people have ideas that they want to say, this is the way, this is the correct way, blah, blah, blah. But you just have to use your judicious mind to say, okay, well, there's a lot of even like super well followed traders out there that don't provide any kind of proof or evidence of how they're doing, and there's just no way to know if their advice is valid or not. I'm not giving advice, I'm just sharing what I do. I would not recommend that you blindly take my advice. But I think it's important to know if somebody says, oh, I have 8 screen, I have 12 screens, and you're having trouble with profitability, you're not able to find profitability, and you think, oh, it's probably because I only have 1 screen. I have 1 laptop. That's all I can afford. Maybe a trader is thinking that. And my goal is to tell you, if that is you, if you find yourself in that position, that is not because you don't have 8 screens or 12 screens or 20 screens. It's something else. And so that should not prohibit you from doing well, right? You can still have an edge and have 1 screen. And, you know, I just think it's really important to question people's opinions, especially online. It's easy to post behind, you know, the privacy of a chat, and just, you know, really important to keep that in mind. So don't be discouraged if you have 1 screen. It can be done, traders.
Yes, I think you mentioned quite a few good things. The number of screen is just gives you more options, but more option is not necessarily what's going to make a difference. A lot of times it doesn't really make any difference as long as you have enough options, right? Maybe in my case, I need to look at 4 different charts, right, for my entry, and my setup is built on 3 different charts, 3 different charts. So basically, I got 7 there. But I don't have to look at, you know, the setup constantly, right? So I can have just, for example, just this 1 screen with 1 setup on 1 pair, and only when I have an entry, if I could do everything in 1 screen as well. It's not very efficient, but I could. I probably will have to switch in between pairs a lot of the times and between graphs, but I would be probably have the same results just with just screen. And the fact that I use 4 is, you know, just a little bit more comfort, but it's not a requirement. It's more ease, I would say. But anyways, let's continue with the what I was gonna say before we get to the charts and do some. Someone asked about the mask. Let me see who it was. I let it on the screen a couple of seconds. Roman, thank you for the question. This is my latest fashion item. I hope you'd like it. All right, so let's see. We have on the chart. I think you are frozen. Your connection or your video is a little bit frozen, Deanna. I hope you're getting back at it. I do see that as well. The quality is kind of pixelated, so I think your connection is perhaps, or something on your side perhaps is suboptimal. All right, before we continue to the chart and do some analysis, what I wanted to say was this, right? There could be just the regular fluctuation, which is completely normal in a random distribution of results, and that is what we have, right? Each result we have, the sequence at which we get winners and loser on any given day, or the distribution is random. Okay, so that's a fact. Let's see if we have. We will have Deanna is coming back soon. I see. Let's see. There you go. Yeah. So the distribution of the results, right? Your what sequence you will have your wins and losses during any period is the sequence is random. Okay, so you will have in time randomly a couple of winners and randomly a couple of losers in a row, or more grouped to each other, and you will eventually see something similar like this. It doesn't have to have this shape, but something similar. And in time, the more data you have, you can draw the average, right? And the average is actually an indication of your expectancy, right? The rate of decline or the rate of climb or growth. Well, what you can see, and if you see that this line is always roughly straight, no matter the time of the day, then for your strategy, the time of the day isn't a limiting factor for your expectancy. But if you see something similar to this, when you compare time of the day, right? This is time of the day analysis, where you're plotting all the winners and loser on not on the day, right? So typically when we have equity curves, we go from this is, let's say, one day and day two and so on sequentially. But instead of doing that, when you do time of day analysis, you will have like, this is the beginning of the beginning of your session, and at the end of it, right, the equity curve. And if you do a analysis like this kind of analysis, you will notice, in my case, what I've noticed is that after London closes, right, so that's a couple of hours after New York opens, my edge starts going. I don't have the same kind of edge. This is kind of much more pronounced, or it's not really like that. I still have a little bit of edge, so it's not negative like it is in here, but I can clearly see a difference in after and before London closes. So that's something that I learned just looking. I didn't get it from anywhere, didn't watch any YouTube video, didn't learn that from anyone else. Just by looking at my data, I was able to do this. Actually, to be fair, my if I don't watch out, this is very negative, right? But it actually is a little bit more sloped. I'm doing this a bit exaggerated so you can see. But let me, the point is that if you draw a line through the middle of the line, middle of the graph, you will see that it's upwards. And in here, it's usually something like that. I would say it's a little bit negative, but not as much, right? Something like that. It's roughly around break even in my case. And I know that this is not efficient. I don't have a lot of this fluctuates as well. Sometimes it's a little bit like this, sometimes like a little bit declining. And that tells me that this is losing, to me, is inefficient for my time, because my edge is before that period, right? So this equity graph is a little bit exaggerated to the downside, but it's to give you the idea that profitability goes way lower after a certain point. That's in my case. It may be different for you. It might be at the beginning of London is not profitable for you, or maybe only in Asia, right? Asian session. So it's important to do these kind of analysis for each one of them. And my findings are not applicable to you or to anyone else, because you're not trading my trade plan, right? You're not. Every strategy will have it slightly different. So I think that's something important to point out.
Victor, you said that sorry, can you hear me okay? Am I connected again? Yes, you said your decline starts slightly after the New York Open. Is that right? Is that what I heard you say?
Not after, but a couple of hours after London closes, right? So after about 4 hours after, that's around lunchtime you mentioned. So after lunchtime in New York, I typically see that my edge isn't, my expectancy hovers around break even. A little bit, it can be periods of a little bit negative, meaning I'm not profitable, simply I'm not profitable, or a little bit higher, but it fluctuates, and it's not great for my strategy to be taking entries right there, because I have tight entries, tight stops, and I need movement. I need volatility. I need directional volatility. So I need to get in when the market is actually going to make strong movement, but because otherwise just the fluctuations will take me out. And when I get in on, in the whole duration of London, I do well. But as soon as I notice, and that time, it depends on, the volume of the the price of the asset, because it's not always the same time. But I can clearly have a window from which the moment price doesn't move as as volatile anymore. And I know from experience that that's where I need to stop, and I know what window I need to where I need to stop. So make sure that I never get into that period where I know my win rate goes even lower and it's already low, and my and the price doesn't get these movements that I need for my strategy to work. All right. Let's look at, we still have 15 minutes. Let's
that
look at
11 to 2.
Go ahead. 11 to 2?
That 11 to 2 period, at least Eastern time. So that, that's the window that I think you're talking about. I'm not sure what that translates to GMT, but that is notoriously, choppy, typically low volatility, very difficult to trade for a lot of traders. Time to trade. And so I think that's a really good question. That was something that I never other traders talking about when I was learning to trade. How there are different time periods that are, that your trading success is going to vary. So thank you for that.
Deanna, I'm not sure, but I think
like
you're
what if you were to trade consistently, what would they be?
I couldn't hear you completely,
Victor,
Deanna. I think there's some issues with the audio. We are only getting pieces of your sentences. At least that's what I'm hearing here. But you were saying, if I understood correctly, what I got through, information got through was that you didn't have that at the beginning when you started trading, right? The importance of time of the day. And you were asking me something about that, but I couldn't hear all of it. If I were to the time zone, what I'm referring to is 5 p.m. GMT, right? From 5 p.m. GMT onwards, not every day at the same time, but roughly from that moment on. Sometimes it get extended, the session, like the volume in the session get extended. I can still get some good trades half an hour, 1 hour after that. But a lot of time after that moment, I know I'm getting into, I really have to make sure that the market is not contracting on the day, because typically what we have is at the beginning, during if you compare the ranges of the Asian, you would see that we're expanding from the beginning of the day a little bit, but it's quite limited during Asian session, as we know, right? In different pairs, depending on if you're Asian pairs, then it might be a little bit different. But on EU and GU, you'll see that the Asian session is obviously the ranges is limited, and then with London you will have an expansion of that range, and as soon as you'll have a big expansion at the beginning of London, and then let me maybe mark it a little bit. If we had this as the axis where we have the beginning of the let's say the day, you'll have the volatility with Asian session, which is not very high. You have London session, it peaks and then typically goes lower, and then you have another peak again with overlap of New York and London, and then afterwards it's only going to go lower and lower. And in a certain moment, I know from experience that when it gets a couple of 4 hours, this is 5 p.m. GMT, the volatility is so low that, let me move this, something like this. I think it would be a good representation of what I'm talking about. A certain moment it gets so low that my strategy simply is not as profitable, and sometimes just simply is unprofitable in after the volatility gets much lower into the end of the day, right? This is the end of the day, and knowing exactly where this point is is very, very important. That was important to me, because if I were to push at the end of the day and I was unaware of this time of the day phenomenon, I would give back. And that's what I was trying to say. I would give back a lot of profits, not being aware where during the day, what time of the day my edge was. Knowing not only what you trade, what strategy, what signal, what pattern, but also what time of the day you're allowed, according to your trade plan, to trade is very important. This can make a huge difference in many strategies. In my case, a very big difference in my strategy, and it might not be for everyone, but I would suggest, I would assume it's a very important thing for everyone who's intraday. Probably is most, if not everyone, will suffer from the change of volatility, because that's what it is, right? At the end of the day, you will have less volatility. All right. I think we lost the Deanna. We will be here as soon as she gets back. But all right, so let me know in the chat what you think about what we just discussed here. The importance of the time of the day, not end of day trading, but time of the day trading. So let's see. Maria says 4 to 6 p.m. UK time, GMT. Yes, it depends. Obviously, you'll have to see for your own strategy and make sure, as we always say, you have to double check everything we say, because it may not be applicable to you. Your situation might be different. In any case, we're not giving financial advice here. This is educational purposes. You have to figure out, with the information we give you, how to utilize that for your trading situation, your strategy, and so on. So let's go to the let's see. We have Deanna with us again. Let's see if it'll be better. I think it's better now. Let's hope so.
Hi, thank you. Sorry about that.
No problem.
Can you hear me
happen.
okay?
Yes, we can. Yes, we can. All right. So yes, let's look at what pair would you like to break down, Deanna? What would like to tell our viewers about? Is there anything catching your eye today?
So I'm gonna switch over. If you can switch over to the S&P for me, then we can go through that. So this is what I'm looking at today. So last night. This is futures chart. So in the futures market, S&P and price gap down last night. There was a lot of news over the weekend. So price gap down and then recovered this level here, which in the futures market is around like 60-25 to 60-30, pushed above it. So for me, this is a really nice recovery that is tradable. Price took out the liquidity below this swing low here, recovered this important level. I've already taken profit on the trade. I am still in a runner, and I'll be holding the runner for now. Price was, impacted heavily by the news that happened during the week. What was that, Thursday night? And so that was this candle here. It shows as the Friday candle, but it's what happened overnight. So price not only took out the previous day low, but on the 4-hour chart, we dropped below a bunch of swing lows as well, and then pretty quickly recovered. So we've got this long tail here. I believe it even dropped below this this swing low here on the daily chart and put on the S&P, and I'm going to be looking for. Can you still hear me?
Yes, we can. I was 2 times. I'm
going to be continuing to watch the S&P.
Go ahead. All right, so I think we have a little issue. Deanna, I will take over and go to my chart, because I think we lost you there. All right, so I'm going to break down GU for those who are for those who are interested on GU. Deanna, I changed. I stepped in because it was. I think we. It's a little difficult for us to hear you when we have longer periods of you talking. It seems to be every so often there's a little like interruption of a few seconds, but it's fine. Let's see on GU. So I'm going to continue on GU, and maybe we can come back to S&P. Maybe it's a little bit different in a couple of minutes with your connection. All right, so on GU, we have we are getting close to a monthly structure above us. It's part of a quasi on the higher time frame. It's not very actionable or relevant for our intraday trades, but it's very important to know that we do have a reversal, possible reversal that could happen in this area. It's a huge area since it's a monthly structure, but it's something you need to know in advance, and that's why I'm mentioning it. Other than that, there isn't anything to do with it, right? If you look at a weekly, the market structure is impulsive consolidation, impulsive, and it looks like we're had a very increasingly shorter consolidation period, and we're getting ready for that. It seems a continuation of that bullish run that we're still having. There isn't any structure in the terms of quasis, entry order blocks, or fresh order blocks currently on the weekly, so there isn't anything actionable. So if anything, we wouldn't be able to get a monthly nor a weekly signal this week, since we don't have any structure for that. The daily shows a little bit different. As you can see, we have two bearish structures above and two bullish ones, right? When we have opposing multiple time structures on each side being created, one after another interchangeably, that is a sign of consolidation. That's the only way for us to get that. And the fact that the bearish structures are relatively overlapping a lot, while the bullish structures are being created on top of each other. There was another one here which I took away. So actually there are three here, but I think it's not telling the story anymore. This is the bearish structures that is. Let me mark this well for you guys to see. Right, so that's the on top of it. There we go. And we had this is no longer here, by the way. When we have the structures being created on each side, where you can clearly see there's a difference in the levels that they are being created, right? When you have at a range market, you will see bearish structures being created roughly at the same place, right? Either, let me mark them again, something like that. Either at the same level, maybe a little bit higher, but a lot of overlap. And if this were to happen on the lower side, you will see something similar to this. It will be a lot of overlap as well, right? If you see the structure being created, that's the sign, or that's the indication that the market is basically consolidating, range bound, and doesn't really have a direction. But the fact that when you see that the bearish structures, right, the bearish order block being created, have a lot of overlap, either below or above, does not really matter. But the other side of the order blocks are being, let's say in this case, the bullish side does have a much higher, significant higher next creation of that order block. That's a sign that although we are relatively consolidating, there is a bullish undertone to the market structure, and that's what we can see in GU here. And that's exactly right. You can see that there's less overlap on the bullish structures than there is on the bearish structure, right? That's a very simple way of reading, what's the undertone, what is the market trying to do with these structures it creates. So we do have that structure that was created. If we come back with the demand area we have right here, we can see that then the market came back and created an order block, right? That was on Friday, and that's a fresh order block. It come back to that order block within very few candles were created. If you go to the 1 hour, you will see that this is actually a bullish quasi, right? You can see it here. See that quasi, right? Established downturn, lower low, lower highs, breaks the neckline, and then comes back to which one? That order block right there. Very, very simple, right? This is the area you need to be waiting to get into the market. How you get in exactly, where you put your stop, that's for you to find out. But I mean, knowing what the area is and what to wait for is already a huge advantage on for your strategy. So that's the opportunity that I saw. This is earlier on, but other than that, we already made that move. So this would needed to happen a little bit later for me to show you guys, as we were getting in or out of it, right? So that's something for to consider. So that's where we combine the quasis and the order blocks for to get in to get these reversal points from the market as it continues in the higher time frame direction that we have. I think we lost Deanna. Maybe she's coming back, or maybe not. All right. So okay. So that's EU. That's GU. I'm sorry. Yeah. Are there any specific pairs you guys want us to look at? In the meantime, I will, or perhaps some questions you might want us to break down. I'll talk about EU, but before that, I would like to remind you guys that we if you want to show your appreciation for this stream, the best way to do that is by looking to search for that like button and clicking on it, to making sure that the algorithms of the YouTube method of workflow, that they identify as this stream as something people enjoy and want to see more of. So don't forget, hit the like button, and that will initiate a process which will help us to show, but only do that, of course, if you're actually enjoying and you want to see more of us. I'm not Pinoy. I think it means if I'm from Filipino, right? If if I'm not from the Philippines, a shout out for everyone who is from the Philippines, a great country. All right, so let's look at EU. We have also someone asking for gold, and it's just not someone, it's Kim. Kim is an outstanding member of our community. Let's look at gold. Then we come back to EU. A little confused. Manny says a little confused about your markings about your order blocks. How do you identify your order blocks and mark the different? Is there any reason for it? Yes, let's talk about that after gold. I think that's a good plan. Manish as well has been coming to our workshop on Discord lately quite frequently. Thank you for that. If you're wondering what that is, we have a community on Discord, which is of the The5ers, of course, where we hold workshops, right? Where we have a great community where there's a lot of activities, not only the workshop, but a lot of activities that will help you as a trader, right? We on Discord, you can share your trading ideas, you can share your strategies and the way to tips and tricks, how to trade better, how to avoid those traps in the market. And it's all in the Discord. It's one of the greatest community and one of the greatest things you could have as a trader, which is an authentic community, toxic free or non-toxic, where you can be yourself and learn and growth as a trader. How to get access to the Discord? The Discord server is for everyone who is trading with the 5ers. So you don't have to be funded yet. Just buying an account, have a challenge, and you will have a free access to the Discord community. Yeah, it's very recommended. I think there is a lot of value to be had being part of a great community as we have. There are many traders there who will generously talk, share with you part of their strategies, sometimes their whole strategies, and it's not about the strategy in itself, but it's about having contact with people who might be able to help you, especially those workshops we hold. Rich, LJ, myself, we are always on every weekday. We're there sharing and having great discussions about having the great discussions about trading in general. So let's look at gold. Then we'll come back to EU, and in between we'll talk about order blocks. Right. So the higher time frames, there isn't anything on gold. Let me take this out. There isn't any structure, any actionable ideas on gold on this time frame. As you can see, there isn't anything. The only order block we have, that is on this time frame, the monthly is way below, and by the time it gets there, it probably isn't even fresh anymore. The weekly, we don't have any structure that are currently well, this is still fresh, but we're quite far from it. I mean, what I mean is this order block that is that demand area. We did have a wick, an immediate retest of that reaction or from that structure, and a very nice follow through in the next few weeks, right? But that's since this is the weekly, that demand area is not very relevant, right? We do have a bearish structure, but as you can see, when you consider the market structure on this time frame, just one order block on the weekly is not going to change that. So whatever signal you take from this weekly order block, you got to remember that it needs a lot of confluence for it to work. And as you can see, we have been in an upwards trend. Market structure is bullish, and not only that, it's accelerating to the end, right? This is not how markets should look like when they are in a relevant supply zone, right? Relevant supply zone is where you have the crescendo, right? See, look at the bodies of the candles are getting bigger and bigger. That is a sign of not the market hitting some kind of supply, but the market getting ready for a breakout, right? So this is important in trading, right? You shouldn't conclude or jump to conclusion just because you have one signal, like a bearish order block being created and being retested while it is still fresh, that it means that's everything you need. There typically, actually, almost always, it isn't just one thing that will indicate a direction or a changing direction in price, right? You need to have multiple things telling you, and it's only the weekly, but the market structure on that time frame is not supportive of that direction. On the daily, let's see what we have on the daily. So we are breaking out of those two order blocks, as I mentioned. We mentioned this before, right? You have two opposing order blocks on the higher time frame that are actually even have overlap, meaning that's an indication of the market getting probably in a consolidation area, And until we break out of it, right, you should expect price to continue within that range. And we'll see. We haven't had any breakout of it yet. There is the close on Friday was very close to breaking that range, but today we're already in it. So on that expectation, you could be looking, or you could have been looking for a short position, a short-term short position on the lower time frame because of that, right? Because you can consider until it breaks out of that range, it's reasonable to expect that it will have some kind of pushback into the range, because consolidations, as long as it doesn't break out, you can reasonably assume that it's going to get back into that same range. And in this time frame that hasn't broken yet, let's see what else do we have. We have a bullish order block here, which is far from where we are currently, and there isn't any on the daily time frame. In any case, there isn't any structural break, right? This is the structural break, meaning all of this is not a reversal pattern. This is not a head, not a left shoulder, but just a consolidation, a higher consolidation. It looks like price is eventually will break out, but until it breaks that consolidation, we should expect it to continue in here. So I would be waiting for price to tell me if that it breaks that range before assuming it's going to break out now. I know it's going to break out at some time in the future, but now is the question, right? Whether it's going to do it right or not. All right, so we have don't forget, guys, we have a lot of viewers here. Thank you for that. Don't forget to hit the like button, subscribe to our channel. The faster we get to our milestones, the faster that they will come. We will have, massive giveaways of accounts for everyone who is present. Well, not everyone who's present, but giveaways, giving everyone who is present a chance to win a free account. All right, the daily order block, the daily time frame doesn't show us anything actionable right now, right? We are in the upper end of that range, but there isn't any fresh order block. There isn't any quasi order blocks to be traded. Let's see, what else do we have? Right, we can extend. This is the upper range, right, on the higher time frame, and we can look to see if there is also already a kind of a reversal here, because this is the upper range, right, of that consolidation, that line, and on the weekly it hasn't closed above, and the daily either, right? It hasn't broken out of it, meaning if we get a reversal from here, something on the lower time frame, something like this on the lower time frames, you can hold on. I think I didn't do that well. Let's look at that. Something like this, where it breaks the structure and then tries to come back, you can get an entry to go short, right? Something in that, if that were to happen around this order block, the upper board, not order block, but the upper border of that range before it actually breaks out of it, right? Before it closes on the daily, and even and more so on the weekly, right? As long as it doesn't close up there, you can look for those reversal structures to tell you that it is reversing, going back within that that consolidation area. That's something that is at least on the daily, on the H4, isn't happening. Let's see, it's all the way down here, I would say, at least for me, according to my rules. So there isn't any break of structure at all, meaning the place, or the way is, the path is open for higher prices, in my opinion, because until it breaks a structural low, and the structural low is way below us, until it breaks that, any move back should be considered a retrace in an upward trend, right? So and is there anything we can be trading, following or continuing on that sequence of thoughts, right? If it's not breaking structure, it's not reversing, and if it's not reversing, then this might be a retrace. And if that's the case, we need to get ready for a continuation to the upside. If that continuation is going to come, it's going to come from these structures likely, right? These H4 order block. The best ones are the fresh ones. And what is fresh, you might ask yourself? It is, I define that a little bit variable, but in any case, it's a mid-single digit number. Okay, exactly is not the because you have to test where exactly how sensitive or less sensitive your strategy is for that number of bars since its creation. But it's in any case a single mid digit number. Okay, so that's that's how I define the order blocks. And we are currently in a it was retested on this candle, right? That's on the fourth one since its creation. To me, this is a fresh order block. It is at the end of a leg, an impulsive move. So you have to be treated with extra care or be extra cautious about it. But if you see the market having alignment on different time frame, then I will be perfectly fine to take a trade long from here. Let's see if that's the case. We go to the H4. We do have an area here which could be very interesting, where we have alignment of a bullish demand area on the H4 being retested as it is fresh, and we have an H4 fresh, very fresh one, right? Immediate retest. The market structure and looking at the order flow is still bearish, mind you. So that there isn't a lot of signs that this is reversing, but this is the area that I would be interested in getting in, and we're currently in it as we speak. So this is great. This is awesome for everyone who might be interested. And there we go. We go straight through it. But that's the of course, that is there a news coming out? Because the market is there isn't any news as far as I know. So very interesting why that happened. Perhaps something on the geopolitical arena. Maybe someone in the chat, you guys can perhaps tell me about if you know any news that happened while that happened, the break of this structure. And sometimes it's not even a structure. I'm sorry, it's not even an event, a geopolitical event. It's just the acknowledgement of something being broken, technical level being broken. You can see that flush coming in. I see that quite often. What I would do is I would break this down into either the 15 or the 5. In this case, on the 15, there isn't a quasi. On the 5, is there a quasi? There is. No, there isn't. No, there isn't. The quasi line is all the way up here. This is the quasi line. There. Let me change the correct tools. This is the quasi line, right? So you have to wait for the reversal to happen on some time frame, some relevant time frame on the lower time frames. Right? This is the 5. Perhaps on the 1, there might be a reversal happening. Let's see there. I would consider this to be the trend line, the neckline, I mean, and this would be then the head and the order block to be respected. Right, so this is the 3. So if we get a close below this area, then it invalidates the setup, right? And now is the moment. Every time it gets back to retest that area, you should read price action and to see if there is a change of control, right? Who is in control? Are the sellers obviously are in control because it is coming from above, right? So the sellers obviously are have an easier job in pushing it lower because it is within the trend, it's within the order flow. But the question is, can we spot something in price action on the lower time frames, like a quasi, an inverse quasi, that will indicate that this looks very promising, actually, for a long. On the 1 minute, right, you can see that it closed below. So personally, that would invalidate the structure, the setup on this time frame, right? So on the 2, but the 2 is still valid. That's the 3. Sorry, the 3 and the 2 are still valid, and you could be using this price action right here to give you an idea if you want to go, if you think the buyers have come in and they have taken over control, right? I could easily now we have an order block, a new order block being created. Depending on what your signal is, and that is up to you, you could get in when price comes back into that area, or maybe around here. Put your stop below this wick and target either the top of this structure, which in this case is 1-to-1 basically, but you can also look for the move of the day. Let's look at today's is a bit of a slow day, so we shouldn't expect fireworks out of it, but let's see what we can get. Let me get to, all right, so we have, it's 45, and on the daily ATR we're talking about 58, 55. So it's still has $10, but then again, today is a slow day. It seems to be that it's going to be a slow day. There isn't any high impact news planned for today. So 45 could just be the whole range of today, which is actually good for an intraday. This is a very nice area for price to bounce from. Although it still has about 10 based on the ATR. It still has about 10 or so, right? This would be the 100 ATR level. So that's a little bit concern. This is the ATR, the low of the projected low of the day based on the ATR. But I would be relaxed or comfortable taking a trade long from here, given the price action we're seeing, right? This is the kind of candlestick combination you want to be seeing. All of these are telling us that the buyers have come in, at least in these 2 candlesticks, and have taken control, right? You can take either, you can also take it already and target something that makes sense on a higher time frame, either this high, which is a negative risk reward, or simply that, which be the next. And if you want to be conservative, you'd put it before that order block, right? That gives you, in this case, 1-to-1, which I think is a good trade. Maybe we'll leave it like that, and we'll consider that in half an hour to see what happened to it, right? As long as this new order block is holding, then your trade should succeed as well, right? So this is on the 3. So let's mark that on the 3. Not a possible entry, just a regular. Okay, let me take the text away then. All right, so that's gold. I think we have a nice area here that it could come back. There we go. That would be I would be interested in price coming back to that area to get in, right? So because this is the area that I'm interested in, and put my stop below it and target something like this would make sense. See how the price comes back to the same area, which is not a coincidence. If you look at the lower time frames, if this trade were to come back to work out, you should see the market react from here again, right? If it doesn't flinch, it just continues to go deeper, then as it is piercing deeper, the probability of the trade is not there. We'll see in the next couple of minutes. All right, let's look at the chat. Let's look at Vinicius says just a flush liquidity. Yes, liquidity flush. Yes, I didn't see anything on the calendar, so I would assume that either something I'm not checking right now with the news, but I'm and typically I don't check the news either, right? I don't have anything open. I know I do enjoy having like Bloomberg on to catch news, but really it's irrelevant. I just trade the chart and that's all I need. So whatever caused it, that's fine. The reason behind the move is, it doesn't change the fact that it happened, and as soon as it happens, then it either invalidates or confirms my idea, and I trade on what I see. Look at that. This is not, that doesn't mean it's going to work necessarily, but look at that reaction. Look at that bullish order block being created. That fits the idea that it has to keep on doing this for it to go up, right? If it cannot get and start creating bullish order block, this is on the 1 minute, which is the time frame that has already been invalidated, so it's not very relevant, that order block that was created in the 1 minute. But this is the 2, which is still, so actually this is the order block you want to be reacted upon, right? See this here. What you want to be seeing is price creating the order block and then coming back to it and then move away, right? That will be a great indication. So it needs to close, doesn't have to, but it needs to start closing above these structures, right? That will be in, it didn't close. So we'll have to see. It doesn't have to be perfect. As long as it starts creating and having bullish order flow from here, right? It can even push a little bit, but eventually you want to see something like this happening where it switches over to bullish order flow, creating bullish structures more often than the opposite direction. We'll see if that happens. Okay, let's check that's EU on smaller time frame. We are actually on the on the lower time frames. James TP has a great question. Thank you, James. Victor, how do you handle floating wins loss for hours or days? That's a very good question. Nowadays, I would say, completely comfortable holding positions a long time, even days, as you saw on EU, for waiting for targets to be hit, which can be days, sometimes even longer than that, weeks ahead, while my entry was on the 1 minute, and while I'm basically looking for a intraday target. But even so, if the conditions are right, I can extend it or upgrade it to a swing trade. And the way to do that is by having a rule-based system. To me, that is the key that has made it for me possible to be comfortable holding positions longer. Because if you're just watching the candles, it's gonna drive you nuts. If you keep on watching, the market is gonna spit candles at you constantly, and these candles can make you fearful. They can they go up and down with the day. News comes in, it's gonna make you mad, right? So a madman, right? So you have to focus on something much more simple. And what helps me is having a rule-based system. So I have a clear trigger. When do I enter? And how do I set my TP? And where my stop loss is going to be. That's it. And at the beginning, set and forget is the best at the beginning. You might optimize it later on. No, I'm not in this trade, but I would be in this trade if I weren't be streaming, and I'm looking to get into this this asset. By the way, I can't pronounce your name, but there's no need to post multiple times, right? Maybe it's just a little technical issue on your side, but if you do this often, you're running the risk of being timed out, or worse, banned from the chat, right? We want to keep the chat as clean as possible. But coming back to the question that Mr. TP was asking, which was a very good one, by the way. Let's see. Who was it? I had it somewhere here. Yeah, James. Let me see where that wasn't the. How do I handle with these? The thing is, you have to accept the randomness of the distribution and the sequence of the wins and losses. There is nothing you can do other than following your plan. That is within your control. But other than that, there is nothing you can do to change anything about the probabilities of your entries, they getting hit, winners or loss. The only thing that is within your control is following your plan, right? So you have to have a profitable plan to begin with, based on data, etc. But once you're doing that, once you're executing it to the T, there isn't anything left for you to do. And once you accept that it is not within your control anymore, once you enter, right? There isn't anything you can do. You did everything you should do. Then it becomes clearer that you should let go, right? Let go and just let the odds do their thing. Whatever is going to happen, if it's going to hit your stop loss on your TP, there isn't anything you can do to change that. There's one thing, you can have a active trade management, and you'll have to backtest it and see if it works out to actually be tinkering with your trade. But from my experience, especially at the beginning, set and forget is the best thing. And maybe if you have the data, you can start intervening a little bit. But unless you have the data, set and forget is the way to go. Okay? And just accept. Follow the rules and accept whatever will come. Right? After 10, 20 trades, look back to see if you executed everything correctly. And if you did your homework properly, that means that when after 10, 20, 30 trades, you should receive roughly the same results that you saw in your back testing or your forward testing, whatever it is you had, right? If that's not the case, then you should go back to see whether you had enough sample size in your back testing, whether you follow your plan correctly, and things like that. But the only thing, and that's what helped me, just for having a rule-based system and focusing on following it and nothing else, accepting the randomness of the market and the distribution of the results you will get, right? The sequence of the winners and the losses. All right, so one of the things you need to, there are things, right? This is like trade management or price action, not 101, but perhaps 201. There are indications of the market of when your trade, while you're in the trade, that the trade is going to hit your TP of not, right? The odds can be read in the market. For example, you have one clear high point here. If the market is going to, I'm going to leave this on here, right? The path that I drew here. If the market is going to break, ideally what you want to be seeing is that it starts breaking the structures to the left, right? It can come back, but it needs to keep on breaking more structure to it can still go sideways, but it should ever so slightly be creating higher highs and breaking these, right? If you see that it's not able to do that, instead of what I've just indicated here, it does this, right? If it does something similar to this, it gets into the area, it goes up and is not able to take this high, and then goes back and comes back, and it's not, perhaps maybe it's gonna take this out, but not able to take that one, right? You can see the sequence where it is eventually going to break down to the downside, right? Because it can't break supply zones and and absorb them to be able to continue, because there is, and sometimes there is a trend line to be seen, to be drawn, but not always. These are the things you could do to know in advance, when to intervene or not. But you have, even with this, you have to have clear rules as to what constitutes a valid reason for you to intervene. This is more active trade management, but I would argue that it's best for everyone to just hold, to do set and forget, and build your statistic around it, and not do active management until you have plenty of data indicated. And this is something that will be able to help you. We'll perhaps visit this in 20 minutes or so. Let's look at some other pairs, as this might take, who knows how long. Louise, how are you doing? Thank you for coming by. Louise is a great member of the 5ers. Great trader with us for some time, always in our workshops. I have in the background, I have some take profits being hit. I'm not sure on what pair. All right. All right. I'd like to, in the meantime, I'd like to invite you to come and join us. Today we will have a workshop on the Discord server. Yeah, and our Discord community workshop in about 45 minutes after this stream. Rahul Rajput, if watch out for not putting the same messages time and time again, right? You're risking being timed out of our chat. Let's see. Let's look at okay. Let's see here. Vinicius, is Ashley joining today? To be honest, I don't think so, because we're already in the last 25 minutes of our stream, and no, I don't think so. All right, let's check. Okay, all right. So we can let's before we go to different asset. This is active. Active. There is a little point there where it almost took the higher lows, but it didn't have follow through and came back, made the lower low. So this is the area actually that you want to see break, right? That's the structural break. That's the neckline, right? Even after this already being a quasi from a structure before, you can find this being the entry for that entry order block. You can always see, not always, but you can always see the neckline. There's going to be another neckline to be already, even if you're already in the trade. And if it can take out this neckline, that's not a good sign, right? It needs to break it sooner or later. It needs to break that neckline, otherwise there's no way your trade is going to work. So these are structures in the reference points or reference levels in the chart that will tell you if the market is actually moving in the direction it should or not, right? This is the next one. After this lowest point, this becomes the swing high. This is what we want to be taking out, right? For the trade to work out. That's coming back to this area is not comfortable, but it is something that can perfectly happen. It does happen from time to time. And for example, another sign of it not working would be closing below these two, that area, right? It wasn't able to do that earlier. Look at that order block being created, right? That's not something you want to see. That's an outside bar. in the relevant time frame. It doesn't mean necessarily that the trade will fail, but this is not a good sign, right? So if you see, it should be creating bullish structures. Maybe it needs more time, but it should be creating bullish structure at some point, either from this point on, from the head, or a later on in time, but it needs to at some point, because the longer it stays in that bearish order flow, the less likely it is to actually reverse. Okay, so keep that in mind. Maybe we could come back in a couple of minutes. Let's look at EU to see if what we have here. All right. Waiting for yes, Louise. Yes, Louise knows it. If you post the same message multiple times, you will get a chance. You will run the chance of being banned from the chat. So we will we'll have to do that if that were to occur. All right, let's look at EU. Let's break it down from the monthly. In the last 20 minutes we have with in our stream, hit the like button if you are if you do like our session, our stream. Remember, we're doing this for you, so if you like it, let us know so we can continue to come and share our views and everything we do with you. Right, on the higher time frames, we do have a we had actually, we're no longer in it, but we had a monthly order block, which is part of a quasi that could come in and it could still do its thing. Although on the lower time frame, I think it's pretty clear that the market is strong and is wanting to continue much higher, but it's still young and it still has like 45 days in order to react to this order block. So let's give it some time. There is a bearish order block here, and the fact that we are above it, that's a bullish sign. On the daily time frame, there isn't anything other than these two order blocks, which none of them has been mitigated, none of them has been retested. That's a sign of how bullish the market is, right? It's creating, remember what I just explained to you guys, how you can just by watching the creation, the frequency of the creation of the order blocks, the bearish ones and the bullish ones, you can get an idea if we are consolidating, with a bullish undertone, or if we're just trending hard, with good momentum. And this is on the weekly time frame. You can see that there aren't any bearish structures being created, right? That tells you something. That's a very simple way of reading price action, where it's creating one side of the direction order blocks and the other side it isn't. In this case, it's the weekly creating a bullish order block on top of that, but a bullish one, and not creating anything bearish, right? It tells you who is in control very clearly. It's the buyers. And that was one of the bases for this trade, which I took. If you're wondering where the entries is and what are the analysis exactly, you can look back, not last week, but the week before that, on Wednesday and Thursday. At the end of the stream, I showed these trades as they were open, so you can check and maybe perhaps even see and listen to my rationale, how I got into them. But I will go very slightly to them again. I left this order block right here for you guys to see on this time frame, because I very, very often talk about this, right? The importance of a structure that indicates, let's say, either a supply or a demand zone, right? Where you have something like this and it moves away from it, right? Like that order block, and it comes back and you have these reactions. Sometimes it's enough to push price all the way for continuation. This will be a mitigation, of course. Other times it moves back, but it comes back for a third touch, sometimes more than 2 or 3 touches, but then it breaks out of it. Okay, but this order block right, as supply and demand area, it still is very fresh in the memory of the traders, and traders will still react to it afterwards, right? It comes back to the same area, and sometimes to the pip. You can see how it reacts and continues, right? Meaning something like this, right? Simple supply and demand flip-flopping of a structure. And that's exactly what you see. This is a much more clear place, but you can see it here as well. You have a bearish order block being created, and see after the market breaks out of it, right? This one that didn't break it yet. This is the candle that invalidates this order block. What does it do next? It comes back with that wick and reacts bullishly to it. That's exactly the same concept of in this case, a bearish structure being broken and then flips and becomes a demand area. Price comes back to it just to continue. You can use this to your advantage. Obviously, you would be waiting for these structures to be retested, and then you can, read price action the lower time frame to see the reversals, and you get in. Don't get in just blindly, because it doesn't work all the time. It's not that easy, right? So that's simple that it just comes in and all the time is going to reverse. Of course not. But it's a phenomenon that happens quite often, and you can certainly make a use of it, right? So this is the daily time frame. We don't have anything other than this order block, but that was already used as a flipped structure. Let's look at. I'm currently still in this trade, going for that the third, the TP3. I hit one. Let me mark this out on the lower time frames. I took a intraday. Let me see where it was. Actually, here, I took my intraday profits. 40% were around here. Was there? I think they were here. Around here, 40% of the profit was taken here. And to James TP, you're still here, right? Yes, I see you're still posting in the chat. The other way, I didn't mention this, but one of the rules that I have is that I need, in order for me to hold trades for this long, right? This trade I am here since, this trade I'm holding since how many days now, right? I think it is for 8 trading days now, 12 calendar days. The only way I can forget about this trade, which is basically how I look at it, I try not to think about it. I'm not actively doing anything while I'm, trading with it. So the only thing that one of the things that I do is I take profit, right? And it puts me in a very comfortable position where I can withstand, fluctuation, natural fluctuation in the market, because I'm already in profit. I already closed a certain amount of the profit. I have less risk on. At the end of the day, actually, often I will not have any risk on. I'll just put break even, but a floating profit is still something you could lose. So there is, floating profit that is at risk. And that week I can be more comfortable, more able to hold positions through longer time. I see we have someone in the back. If you want to be added, could you give me a thumbs up? Just letting me know. Yes. Okay, perfect. We have Max joining us. Awesome. That's Max. How are you doing today?
Hello, hello. How are you? I'm good, brother.
Thank you. I was explaining about the how I go about holding my trade, or which are in this case it was a day trade, which was meant for a couple of hours, but had the option to be upgraded for a swing trade. Do you refresh our viewers again? How long do you hold your trade?
I used to be a scalper, but right now I've actually shifted more into intraday trading.
Okay.
So that could be multiple sessions, or it could be multiple days. like basically it depends on the macroeconomic factors,
Okay.
and if the trade or the factors are playing out and there's no shift in my bias, I tend
Yes.
to hold it for longer periods of time.
Okay.
And if there is any adaptations to be made, let's say, I'm in a buy on gold, right? And there are any economic releases which invalidate my buys on gold, then that is where I'll be exiting my positions.
I understand. We do see, coming back, you mentioned gold. To me, if I enter, this is my personal, for those who were following this trade, this trade idea, I personally, I would rather have my stop very close to the invalidation line, and I'd rather be stopped out and look for a new entry, as long as the setup is still valid, than having it quite wide, just in case you have these movements where it takes out the previous low for a little bit and then may or may not change. Here, actually, I think it's quite bearish because it seems to be reacting reduced to, this is just 1 minute, but it seems to be reacting where we have that flipped, the same concept like we just talked about, the demand area that flips into a supply zone. So that could be, we'll have to see if it comes back. I'd rather take a stop loss. And then get in if it breaks structure again, right? The neckline would be this one.
Okay.
But actually not on the 1 minute, on the 3 minute, right? Oh, and already we have a close below that area. So I would not be, I'll just take the stop. I didn't take the straight, but if I were in this trade, I will just take the stop. And that close below that, between the two yellow lines, would be my indication that, the trade is over. The setup is at least in this time frame, is invalidated. But coming back to the question, Max, you mentioned multiple sessions, meaning you're a swing trader.
I am an intraday trader, so multiple session as in my
You
trades
mean,
can from London session to maybe going
I see.
New York. Yeah.
Yeah, I understand. Sorry, I thought you meant like sessions as in a day. All right,
Yeah, that's-
multiple session, but you don't hold overnight as often?
Not often. Like I try
Okay.
to close my positions and come back the next day. But if it
I
is
see.
very promising, let's say I'm up around 200 pips in profit, then and still I'm sticking to the same bias, I close half of my positions and leave some runners running.
I see. And those you do leave for overnight and so on.
Yeah.
Okay, so you do upgrade them as well, like I do.
I wouldn't leave a position like let's say I'm just 20 pips in profit and I've been holding for more than a day. I'd rather take I just close the position and get a better entry the next day than hold it. You know what I mean?
Yes, I know exactly what you mean.
Yeah.
It makes complete sense because you need to have a certain distance from your stop loss for it to be able to be held overnight. The fluctuation from one session to another, and then you have perhaps London coming in the next day, and it might take out those lows before it actually starts getting on. Is a real danger for any position being taken for a long time. Awesome. I like that. We have someone else in the back as well, in the background. Do you know him?
Who's it? I can't see anyone.
Okay, no, then might be just on my side. Yes. So, are you in any position right now, Max?
Not really. But I could just give a quick analysis and
Sure.
touch more of what I traded in the last session on Friday
Sure.
and what
Sure.
we could expect for the week.
Sure. We are at the end of our stream, so we don't have a lot of time, but we certainly have about 4 or 5 minutes. So would you be able to prepare something in that time? Perhaps make it just a little idea, a little taste for the viewers to let them know what you have been trading. Maybe very skimming through it, just a couple of minutes, because I'm sure they want to know, your trades. You're new to the audience. They're probably very eager to see your trades, Max.
Sure. Actually, I should have joined the stream a little earlier because what I was looking for is playing out right now. But
Okay.
anyway,
Would you like? But in that case, I would say trade your edge and show us, tomorrow and what it was. I rather have you trade your plan than to stream and trying to do both of them and risking missing your trade.
I'm not taking any trades right now because the move has already played out on gold.
Okay.
Yeah.
On gold, you say?
Yeah, on gold, yeah.
Okay, let me go back to gold. Yes, I think that's actually that's you guys can, for those who are wondering, that move, this big move is not a big surprise. You can actually see this is the story. I think this is enough for us to end our stream on. We had an area, a demand area that where we came in and we could identify a quasi, even if it's on the 3 minute, which is very slow, very low time frame. We did have market react to them quite often, and we on the 1 minute it invalidated the setup, the entry, but on the 2 and the 3 it was still able, we were still able to take it. As you can see here, it was only a wick here and a wick in my for me, that's something I can still trade. And look at what it does on the 1 minute, right? So it breaks the structure, right? After the signal is invalidated to me, or the setup, right? I had this arrow. This is the close to me that told me that the structure is broken, right? If the market is going to do what I was expecting, it shouldn't be closing below these two horizontal lines. And look what happens afterward. After the structure breaks, and these are indication that your signs, right, your signals, right, either to enter or your signal to exit or your signal that the setup is gone, are active. When the market reacts afterwards, in that, even if it's, in this case, it's against my setup, I this is a good sign that you're reading price action correctly, because once you see the flip of the order block, right? This is a demand area right here. It gets in, it reacts to it, gets in, react to it, comes back, has a wick. That doesn't necessarily scare me as long as it respects its coming in. The moment it starts closing below it, and to me, that breaks this order block, this entry order block on the time frame on the 3 minute. What does it do next? Right? It goes in, retest from the low side, right? So it's a flipped order block in that case. And once that breaks this low of this candle, it just falls from the sky like a brick, right? That's to me a confirmation that the structure was broken. Obviously, you can front run these kind of movements. I don't do them, but you can certainly do that. Once a structure is broken, even if it's a area, a demand area, you can flip it and take the long side. It's the same idea that I was talking about here on the daily time frame. So assume, actually we only have 2 minutes left. Assume we have, this is the same idea, right? So this being a supply area, when price comes into it, you can look for a short. Once it breaks it and invalidates this structure, it comes back, you can be looking for a long. So you switch your direction and you look for that long, for that continuation after that structure is being invalidated. Very beautiful. I like that. All right. So now that you is there anything you're looking for, Max, on this pair or any other pair?
Maybe I could share my screen.
Sure. Anytime you want. We
Yeah,
have about 2 minutes. Go ahead.
I'm going to be very quick
Sure.
because we are nearing the end of the stream.
Yes, we are. Go ahead.
So, touching more on what I traded on Friday, uh, basically my main bias was looking for sells on gold, and I said I'd only be looking for the buys above this price point if we either had very, very weak US data, which feeds more into the rate cut bets, which gives dollar its weakness, or we had any new fear headlines, right? So
Mm-hmm.
most of the people looking at the charts would be wondering or probably thought it was just a breakout. But what do you think caused this breakout, which just flew for around 500 pips on gold in the Asian session, right? So all these asset classes are driven by real world events, right? It can be gold, it can be your currencies, it can be your stocks. So everything is driven by real world events. And right over here, we had the headlines stating that Israel strikes Iran, right? That is where I'd have an adaptation. Yes, I was looking for sells on gold. Yes, my main bias was sells. But right now, we have an adaptation to be made because we have geopolitical tensions on the rise. And this is something which we got on Friday. And as soon as we saw those headlines coming into terminals like Bloomberg and Reuters, we could see the inflows on safe havens like gold, safe havens like yen over here, which caused the downside. Equity is dropping, risky assets seeing outflows, and stuff like that. So that's how you see the correlation, and you understand that macroeconomic plays a very important role. And after that, over the weekend, we did have tensions. We did have some escalations going on, some mixed headlines going on. And after the market opened, we saw a very slight gap up, right? So these economic events, once they get priced in, they don't hold any market impact unless we see further escalations, right? So we after the market opened, we really never saw any new headlines which increased fear. We never saw any major escalations. Yes, we have fear lingering, but we do not have any major escalations going on, and that is what is causing. Over here, we also had a headline uh, which stated that not Trump, actually, Iran is seeking a ceasefire and sending messages to Arab to end the hostilities. So that took away from the fear and caused some sells on gold. Actually, I was looking for the sells on gold around this price point. I missed it because I was trying to join the stream, trying to get the link from Josh. Uh, but right now, unless we get any new fear headlines, I'm not going to be looking for sells on gold again. Buys on gold again, right? So we have broken out. We have corrected this hold upside move in an equal fashion. So I'm just going to be looking at pullback sells for the upcoming week. Maybe a pullback into these key levels over here, 3406.500s, or even a retest of this order block and accumulation over here. So that would be my main bias right now, looking at pullback sells and continuation sells on gold. And I think I'll
Perfect.
be ending off over here, and I'll see you guys in the next stream.
Perfect. I love it. Thank you for your insights, Max. We really appreciate it. Awesome that you were able to put the price action of gold in the fundamental perspective, right? What's happening? What's driving these movements? and what you would be waiting for price to change its direction. You have a bias, a bearish bias going forward, unless there are some headlines coming out where there is increased risk instead of a decreased risk, which is currently what you read into that Iranian call for help, or ceasefire, I should say, which is awesome. I like that. We have you know, that fundamental side of things to our viewers as well. All right. On that note, we have come to the end of our stream. For everyone who is, if you're appreciative of our stream, if you think this is something you enjoy and you want to see more of it, don't forget to hit the like button. You can make a difference in making this a even greater. We are already a very great source of trading information, education, commentary for the trading community of authentic traders. But we can do even better. We're just getting started. So hit the like button, subscribe to our channel, letting us know that you want to see more people like Max, like everyone we have on our stream. Too many to mention already. So I will have in about 40 minutes, I'll be hosting a workshop on the Discord community. You're invited to get in and start and be part of that discussion. With that note, thank you, Max, once again. Do you have any last words before we?
Amazing host. Appreciate all that you do. See you in the next stream. Take care. Bye-bye.
Thank you. All right, nice words. Thank you, Max. Well, see you guys, everyone, tomorrow, as I see that there is TPs being hit in the background on one of the screens. It always distracts me, but yes. So hope to see you tomorrow again. See you. Bye-bye.